Really bad habit, if it moves gotta grab it, fuse like a magnet, lose won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes.
All right, guys, Happy New Year to you. Happy New Year, May. Good to see you again.
Yeah, thank you for letting me not be lazy, because I've been so bad about YouTube recently. So I really do appreciate this.
I've been a little lazy too. I was doing a lot of end of year trading and trying to make a lot of decisions and watching a lot of the drama just unfold in the retail community and various different tickers. And I haven't been doing as many videos, but we're going to get back on the grind here in the new year, right, May?
In theory.
In theory. Okay. Well, I am.
Yeah, no, I'm going to do the best I can. I mean, I'll never let an earnings go by without saying something. And then goodness knows there's always some new release that's going to be extra fun for us to do some type of something on. Anyway.
So our topic tonight, guys, is going to be answering your questions about debt. And we got sent some questions on Twitter. We'll try and tackle those first. We'll also intersperse your questions as you ask them in the chat here. And for those of you that are waiting for my Q4 earnings video with my estimates, it is done.
I'm curious.
It's done. Huh?
Yay. I'm curious. There's a bunch of different people. I love to hear all the different opinions on that, because I refuse to do estimates. So it's like really fun for me to see where people fall out.
It's really difficult. There's a lot of moving parts in Q4, but it's done, and I will publish it as soon as we finish this live stream tonight. So if you guys are still awake and you can wait another 15 minutes for it to upload, you can look forward to that.
Cool.
Dilly 1796 Patriot says, Anya, good evening. Doc Zeno, welcome. Tech we love, howdy. Steve, good evening. Robert, Dog Mom, Carlos, Fidget Spinner, welcome.
Funny names, some of you guys. That's great.
May and I were chatting before we went live here, and I just want to give, as I'm trying to do as we start out the new year, because people don't watch me every day. They don't watch May every day. They don't always follow us on Twitter. But just in case there's any shadow of a doubt, I'm going to state that I am not paid by anybody. All of these ornery, awful opinions are my own DD. I use my DD to manage my trading style, my trading strategy. I share it here with you because, hey, why not? You're getting a lot of other bad information. Why not just throw my bad information into the mix? No one pays me. No one has ever paid me. May, how about you? Who's paying you?
No one is paying me, but if you'd like to, you can find me at Twitter and Market. You know what I mean? Listen, and somebody asked what brand of toothpaste do I use. I actually used Crest Ultra White, but I also have some dental work that I always have to do because of an accident I had when I was a kid. So I got to do a couple of maintenance things later this year. So if you'd like to pay me to do some stuff, let me know. Otherwise, that stuff is coming out of pocket. So
and I'm sure May knows, like myself, if we ever are paid to talk about a stock, there are required disclosures that you have to make. So for everybody talking all that nonsense that we're paid or we're ever paid, May and I know the rules. And if we ever did take payment, there'd be a disclosure.
I would hate being tied up on all that stuff too. Like, honestly, I want to be allowed to say what I want to say, and that's it.
Same here.
Yeah.
Yeah. I don't want to be influenced by payment.
Say the things we say. Do you think any firm would be okay with the way? I mean, I'm so direct in the way I say that. I think if I had to go through compliance, they'd be like, May, could you possibly phrase this differently than these guys are blah, 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 or something?
Or it'd be even worse. May, you can't say that. Yeah, you can't even cover that topic. Sorry.
So debt. Okay, here's the thing, guys. I do have some debt background, but I'm not a debt extreme specialist. To be a really good debt person, you actually have to have the legal background, which is a little bit of a different animal. So I will answer as much as I can, and then I will flat out tell you if that's not where I got any kind of brain power. So
And I asked May to come on because, compared to her knowledge, even though she's not maybe the full expert, I'm just a peon.
oh,
And
you guys
I
are
mean,
so
I understand how debt works, and I understand how business works, but her
Yeah.
level of dealing with it is multi levels above mine. So we're gonna let her do the heavy lifting on the conversation tonight, and maybe I'll just do the translating if she doesn't understand your questions.
Yeah. Or that's really helpful if you don't understand what I said too, because sometimes I don't know if I'm using weird words in some really special way.
Yeah, that I can do.
Okay.
So, do you have the list of questions pulled up, May? If not, I can try and find
Oh,
them.
good. That would have been really convenient, but I did not do that.
Give me
Is it
one.
Teddy's questions? I saw a bunch of by Ted Moto G. Was it your
Yes,
question?
he had a long list there, didn't he? All
Yeah.
right, 1 second. Let me make sure I have this tab muted.
And then I might need to show screen because I did pull off some of the like what it would look like. I think a lot of folks are focused on equities, options, and other stuff, and they may not have ever seen what basic information that they give you with bonds and stuff like that too. So I have that available just in case we need to swing to that.
Yes, absolutely.
Yeah.
You can go ahead and do your screen share, and then let me know when you want me to turn it on.
Let's start with the questions. What's the first question?
All right, number one, Teddy asks. His Twitter @ is Ted Moto G. What would be the steps required to roll over 2026 $1.9 billion secured debt? Do they roll it or issue new 2031 bonds and then buy debt for 2026 in the open market?
Okay, it's actually mostly number two. So we call it rolling debt because I'm an options trader, so I always think of rolling it that way. But the fact is, what you'd be doing is you'd be taking out new debt with the use of proceeds in that prospectus, saying I'm going to pay off debt. That's really it's oddly enough as simple as that. And then as soon as you finish the debt capital raise, or alternatively it can be done as a swap. There's a couple different ways that the bank could do it. That's beyond me because I know that sometimes they structure it so that the timing is like very specific. The second thing to note is that these bonds mostly have a call feature in them. So a call feature, this is where I think a lot of people got confused because I think they thought that the call feature had to do with options. That's not correct. And I just want to, that's where I'm going to share my screen really quick and just show you what it actually looks like and how you would read it. Because it took me a while to realize this was where it's confusing. So, okay. So whenever you buy a bond, I have two of them here. Okay. So here I have the 2025s that are coming up in they're due in May 15th of next year. So they're coming up really, really fast. And I wanted you to contrast that to the ones that are coming up in 2026. And if you've got any access to these bonds, so this is coming off of E-Trade. Okay. I don't have any kind of special Bloomberg action going on anymore. I don't have anything like I am the most boring human being as far as like technology goes because I am fundamental in the way that I trade. Or actually, I don't even think it's necessarily trading because now I'm realizing some people are doing some things that are really intense that are, okay. But if you go to E-Trade and you go to the section where it says trade bonds and you start looking up bonds using that brokerage firm, I don't know another resource because I know that's a question that some people have, but that's how I look up bonds. First of all, you will only see the bonds that Morgan Stanley has in inventory. So actually, let me show you this all the way. And so if they don't have it in it just so happens they don't have the 2026s in inventory tonight. They may have it tomorrow morning. But if I wanted to buy or sell them, I would do offer wanted or I would buy them, either one, right? And so then they would go out in the marketplace and get the appropriate bid ask. But what I want you to notice is this part right here where it says callable 224 greater of 100.979 or make whole par call. That's a lot of jargon. But notice the thing I want you to notice is $100.97, which we multiply that to get 1,000. Since the bonds are in 1,000 a piece, you multiply that by 10 to get the price of what it's callable at.
Okay.
Versus the greater of 100. So what does that mean? That means that this call feature that was built into the bond means that if you wanted to call the bonds back, you just pay par, and the broker will basically call all the bonds in. And this I think is a couple. He's got a couple of questions in a row that
You being AMC, right? If AMC wants to call the bonds
AMC's
back.
like, yeah, if they're like, I'm going to pay back the 25s. Okay. Who has they don't have to like, I don't have to like, I don't get a say in it. They just can call it back at par. Okay.
Right.
Now, if they wanted to do the other bonds, they'd have to pay an extra 97 cents. And as you go farther and farther back, it'll be like $1.01, $1.02. And you can just look, because if you have access to anything that can look up bonds, it'll always be callable at, and then that. And then usually there's a drop down. You see here where there's like a drop down, it says call schedule and the drop down. Almost every single GUI should these days have that drop down, and that drop down gives you the schedule of when can you pay it back just at par value or face value, which would be 100. So that's just what you took the loan out at. When can you buy it back? At like, if you wanted to buy it back early, what's it going to cost you to buy it back early? Okay.
So from AMC's perspective, if I understand it correctly, if they're calling it back early, they're retiring the debt early, they're going to pay a little bit extra to the bondholder for calling the bond back early. Is that right?
Yeah, they're going to do it the old fashioned way. Yeah. So then question 2 is, what's this open market thing? Like, why can they do it at a discount in the open market? Well, in the open market, that's just some guy that's like, I don't want to hold it to par. I don't want to hold it to, I don't want to hold it to, I don't want to hold it for the full duration. I want to get rid of it. I'm out, right? What will you give me to get out of it right now? And actually, interestingly enough, if you can get comfortable with this on AMC, you can also get comfortable with it as relates to the banks, because it's actually they're like cousins as far as issues go. You know what I mean? The fact is, as long as AMC doesn't default, that bond, like the bond holder, me the holder, I get $100, right? It doesn't matter what I bought it at. If I bought, and that's, if I bought it, which I'll show you in a second what the pricing was when I bought it when I started buying, when I bought some of them in June and then kept buying them through to September. When I bought some of them in June, I bought them at like $43 is my cost average for one particular vintage of bonds before I decided I didn't want to buy that one anymore.
Because the company was so troubled, the value of the bonds had dropped and you got them at a really steep discount, right?
That's right. Because in order for me to buy it, someone else has to sell it to me. And they're like, you know what? I'm out. $43 yours, my friend, because I think it's going to zero. Like that's literally what was happening at that time. And so so you had to make a call on what you thought about the lawsuit. And I had some strong feelings about it. Clearly, people didn't agree with me. Do you know what I mean? And some of them didn't agree with me on Twitter, and some of them definitely didn't agree with me on the street. So it was a very
but it sounds like you're doing good on the bonds so far.
Yeah, I'll show you. And so first, let's make sure that I answered the question as far as like, so so right now, just to make it crystal clear, if he just did it the old fashioned way and called the bonds back, he would owe whatever's on that call schedule. Okay. So in the case of the 95, in the case of the ones that are due in 2025, right? So if we go here, the ones that are due in 25 are these 5.75% sub notes. And there's not much. Like this 98 million is not your issue at all. But if you want to call him back, he pays whatever is left on the bond, whatever he hasn't already bought back of that bond, but I'm sure he hasn't bought very much, because at 5, actually, I don't think he's bought anything back because it's 5 3/4. Why would you do that? That's a great interest rate, right?
Yeah.
But if he wanted to, for some reason, he would be like, I'm calling him. He pays $100. That bond currently trades at 70 something. I'll show you. Right. This is that bond because I own it. I bought it at 71 and I cost averaged, and my cost average ended up being at $71 by the end of September because I kept buying it. And so right now it's at 76. So he's got two options in that case, right? Number one, he could call the bond and pay 100, or he could be like, I wonder if anybody will sell it to me at 76. So if he really desperately wanted to do that, he should say nothing, go out on the market and buy it at 76.
So they could do that. They could just go themselves out on the market and try and buy it from someone, right?
Yeah. But that's not the one he's going to do, because as we can tell from like how little, like 98 million is not his issue. Do you know what I mean?
Yeah. Can you put up the debt schedule there again from the 10Q just so we can level set the conversation? because a lot of people are asking me, why is he paying off this 2026 debt? Point out to them on the screen there, the 2024 and 2025. And let's look at how small that is right there in the middle of your screen.
Yeah.
2024 is $5 million, 4.9. 2025 is 98 million. I mean, that's nothing.
Yeah.
Right?
These are just like course of business. Plus it's the interest rate too. Like these interest rates are not a big deal.
Right.
Yeah.
And the one that he's attacking is the
second lien.
Yeah, that one right in the middle on the white, the 10, 12% cash pick toggle.
At this point,
1.1 billion at a very high interest rate comparative to their other debt.
Yeah. I mean, it's really 12, even though we say it in long form, because of all the things that happened from the time this was actually done, this is a 12% rate.
And then the other part of the 2026 debt, do you want to talk about that at the top there? The senior secured credit
facility. So this is, I mean, you usually just keep credit facilities going. So this is, it's like, yeah, you wouldn't touch your credit facility.
So it says due 2026. So everybody kind of lumps it in. Are they just going to renegotiate a new contract with a push out the date?
Yeah, it's just because it's just a,
that's like a line of credit, right? That's not even a bond.
I mean, it's senior secured and it's first lien. So I'm not going to pretend like it's not a loan that has priority over second lien. But I mean, like if I'm going to give a simple answer, I mean, for the intents and purposes of how you're asking it, the answer is yes. But if you were like, if we have to go to court, then the answer would be like, well, legally no. But you know what I'm saying?
Yeah. And I've seen even companies that are, that have cash and have cash flow. They often have credit facilities, right?
That's exactly correct. Yeah. The Odeon is kind of a mixed bag though, but the Odeon senior secured, I think actually secured means that there is something that's held against it anyways. So that bond as well is actually double B rated. If I remember from a really old screenshot that I have, that one is actually a higher rating. So because it's secured means that there's something that they can take that's unique to that bond. So bond by bond, some are secured by something. So for example, if you wanted another industry that has this kind of nuance and weirdness to it, you could go to the defense industry, specifically Boeing. Boeing does a lot of a lot of the financing of the Boeing debt. And man, I tell you, when you see like the debt reports for something like Boeing, they're like long. They're not kind of long. They're super long because it could be the case that every single aircraft is actually funded by a different piece of debt. And the piece of debt that you have actually relates to a specific plane. So it can actually get that precise. So when you see secured, that's what it means. There's something that's attached to it such that you can't really compare it to everything else. So if it's secured and you get to, like they failed to pay, you take over something. So like your mortgage technically is very much so, not technically, it very much so is secured debt. You failed to pay, the bank takes your house, right? It's like
your car too, right?
Exactly. Auto loans are also secured debt. You failed to pay, they take your car. So all of this stuff. So the second lien, everything from Odeon down is not, it's not secured. So like all of this stuff down here, that's where book value comes into play. Okay, so now we're getting a little past our skis here on like what we want to discuss for this particular moment.
Let's keep on knocking through the questions and we can get into the finer points. So Teddy's second question, is it possible for them to buy all the debt for 2026 in the market, or is it a matter of negotiation with some holders? I think we sort of danced around that. Do you want to give him a close the loop answer?
So first, hopefully it makes it a little bit clearer, given what I just said, that that you're in your dream world. If you really are able to buy back the debt on the open market, do it that way first before you then call the debt in, or alternatively, what they're already doing with Antara, because most of that debt, I mean, a lot of that debt is Antara, right? Like they're a huge owner. They own the hugest slug of that. The fact that they're willing to negotiate above the stock price, as annoying as it is that shareholders getting diluted at 7 and change, 6 and like just under 7, as annoying as that is, it indicates that Antara agrees with me, which is if AMC goes bankrupt because of them specifically, then they're going to have to go to bankruptcy court. It's going to be a real pain in the in the booty, so to speak. I don't know what word to use online anymore. Like it's a real pain in the rear to actually then negotiate it out. Even if they took the company into bankruptcy, they'd have to hire a management team that could then liquidate. But given the book value, there's nothing to liquidate. So their best bet is for AMC not to go bankrupt because
everybody says that private equity is trying to drive AMC into bankruptcy, and Adam Aaron is in cahoots because that is their end goal. Can you just share your thoughts? Like, is there any sense at all in that argument? Like, I get it. Like, if there was some IP value or some real estate value in a bankruptcy, maybe, but what are your thoughts when you hear people say private equity is working in cahoots with Adam Aaron to drive the company into bankruptcy?
I mean, I can't see bankruptcy I'd really have to understand. Okay, so never say never, but it wouldn't be because, like, given where book value is right now and given what it actually takes to work a company through bankruptcy, I don't understand why they would do it. I'm not going to say that somebody couldn't come up with a really fancy reason to do it, but I really need to hear it. I need to hear it in its entirety, all the way through, and then have them show me the numbers, because it doesn't totally, like, next year when they've built out the concert business and you can see some legit, but even then it wouldn't make sense because you'd put in another management team that would do exactly what management.
Yeah, you're stuck with the same problems. Although you do have less debt, you have 90 million less in interest payments, ostensibly.
Which makes sense because I just think about this. The job of AMC CEO is not like the job of other CEOs. I mean, if you just think about the number of folks that like terrorize people on Twitter, let's ignore the fact that they do it then to management, right? Like if I was to use my little baby experience as a fraction of like what must be happening on the daily to like management, you got to find a CEO that's willing to be, and then what are you going to compensate him to deal with that? Do you know what I'm saying? That's I think at this point, unless the people chill out and stop treating management like this, it'll be so expensive to replace anyone.
Yeah, nobody would want that job. And it also amazes me that everyone thinks someone else could just walk in the door and do anything different.
Yeah, I don't know what they do, because the first 6 months that you come in as a CEO, you just review the business. And maybe you've done that before, but you've got to at least do a review of the business and then figure out who you want to keep and who you want to change. And then if you change them, then you got to get them settled in. So it's not like, this is a business that really needs to move fast because the market is moving very fast. I would be really shocked, but weirder things have happened on this earth. So I'm not going to say like, no, never, it could never happen. I really am sensitive to never, because weird stuff happens all the time. And it's possible they're just seeing it a different way, but I really need a legit argument, not some crazy argument that never, ever acknowledges precisely what happens if you were to kick out management and put in another person. I mean, just to give you a sense for it, your typical CEO search would be considered short if it took 6 months. That would be a short CEO search. Okay. Like, just to give you a sense for it.
I've been talking to some friends that are CEOs and that have dealt with private equity. And I think it's safe for me to say at this time that people that have a very simple minded way of looking at this, like their thesis is private equity's job is to bankrupt every company that they're involved with. That is a oversimplification and a not understanding private equity at all. These people that make 50 videos thinking that they are the expert don't know what the hell they're talking about.
Yeah, that was in the 80s in a very specific moment in time. And I'll tell you what that moment in time was. At that moment in time of the old school Wall Street, during the LBO phase, companies were legitimately undervalued. So the metric that, for the folks that don't do fundamental work like you do, the metric that you're looking for is book value. And specifically, let me just be super specific. You can even use You can even use Pretty Woman if so that we're not always using classically men's videos. But I watched them both, so whatever. But either one, the what they were doing in that period was they were buying the companies and then breaking them up because book value, which is how you would
Right.
actually do that calculation, book value was significantly higher than what the open market was given. It was really interesting because a couple weeks ago I was on Twitter and you had all these people saying, the private equity is getting into these blue collar businesses and ruining them because you used to be able to buy them for 2 times book value, 3 times book value. And now they're paying like 50 or two times EBITDA. Sorry. 2 times EBITDA, 3 times EBITDA. And now they're paying like 15 times EBITDA. And that's just ridiculous. It's ruining America. You know what? I got news for you because that 2 times EBITDA was exactly what the robber barons did because that's what stuff was trading out on the public markets. It was only after that period that people really conceptualized what it meant to be truly undervalued. So all of that, as much as it sucks, I get it. It's harder than it ever used to be to buy a nice, solid cash flowing business. Okay. But it's also harder than ever used to be to do nonsense stuff. You know what I'm saying? Which is good. And so it's not as like, it doesn't make as much sense. It just, okay. I feel like I got it. I feel like I got it out. That's how I feel about it.
Okay, let's move on. I think Teddy has a great number 3 question, and I see your guys' questions in the chat. We're going to try and add some of those in. But let's get his number 3 because he has like 9 of them, and I thought they were well thought out
Good
questions.
Yeah, Teddy, good job.
Yeah,
Good job.
hat tip to Teddy. Could some short companies hold 2026 secured debt and refuse to sell it back to the company? I'm ad-libbing that part. Therefore, triggering some sort of default / bankruptcy.
They can't trigger a default because the only thing they can trigger a default is if the company defaults and fails to pay back the terms of the loan. Okay. So I know that it's interesting because I think sometimes if you're an equity investor, especially if you've been like really terrorized by these shorts, it's hard. You're looking for ways that people can manipulate the bond market in similar ways. In fact, it's a little bit, I'm not going to say it can't be manipulated. I'm saying that this is not a lot of the ways that you would do it disappear very quickly in the bond market. So all that would happen if a bondholder didn't want to sell back is that call feature. So that call feature tells you if for some, like, let's say tomorrow, there's like a huge white knight, Warren Buffett. I don't think this is going to happen, by the way. So please don't think that I'm saying that. But let's say Warren just wakes up and he just wakes up one morning and is like, you know what? F it. I'm going to buy AMC, right? and I'm going to pay all their debt. And I'm just going to, Berkshire Hathaway that has buku bucks money, like some ridiculous $100 billion. I'm going to be their bank going forward. I'm paying back all the debt, right? Okay. If the bondholders didn't, first of all, none of the bondholders would sell. They would all hold it to maturity at that point and force Warren to pay the call feature. Okay.
Sure.
Every day of the week. But they would never be able to not sell it back because of the callable feature. They would just have to, you would just have to pay that little difference that I showed you. So hopefully that made sense, Teddy, but really good question.
All right. Number 4 on his list. Let me find it. Do the bond values react in sync with the share price, i.e. AMC share price drops 20%. Does the debt drop 20% or more or less? Does it go up? What's the relationship of bond price to share price?
Okay, it used to, but it does not now. And the reason it used to, and this is where I think people get confused, because if you just Google search or whatever, I'm sure I've not done it because I just don't care because I know because I have first, this one I, it's not something I need to look up, so I wouldn't look it up. But I suspect that if you looked it up, you'd get a fair number of Google websites that suggested that if bond prices drop the same way that equity prices drop for the same reasons. And that's only true if the reason that the bond price is dropping is because it's going bankrupt, and that will also take the equity down. So that's why there's so many cases. This is one of those classic ones where you're like, well, what happened? What about that case? What about that case? What about that case? In all of those cases, the issue with the company was that it was going bankrupt. Ever since, so if we look at this, so I'm just going to go back to this, right? When I bought these things at $43.80 and when I talked to my friends on the street versus my friends on Twitter, Both of you yelled at me, by the way, just FYI. Both of you told me that I was an idiot. So there's that. So for whatever reason, as much as you guys think you're at odds with each other, both of you, for whatever reason, agree I'm an idiot, which I'm actually okay with, by the way, because I'm an idiot and up 52% and up 31% on one of my bonds, 19%, and none of that counts the dividends. So if I'm an idiot, I'm cool with that as long as I'm
You're a
actually doing
31% up idiot.
yeah, plus dividends though, plus dividends, right? So, so I'm super cool. If that's what it takes for me to be up 41% every day of the week, just call me an idiot. It's fine, right? So when I was the idiot, my response was, I really feel like this judge is actually doing the thing she's doing, not because she's going to let the AMC share she's going to rule against AMC, but because she wants everyone to be heard in a manner such that the appeal is not necessary. So she wants to address anything that might then go into the appeal. And that's why I actually bought the bonds. Now, there was a couple of other people at the time, as you can see, my earlier bonds, which I stopped buying, were the 2027s. And I bought the 2027s because I wanted the most leverage, meaning the 2027s were going to move more aggressively than the other bonds. And also the 2026s I couldn't get my hands on. So that was that, right? So then it took me a while to figure out exactly how to find the QSIPs for these things out without a Bloomberg. It was so painful. Somebody accidentally actually just posted all of the bonds. And I was like, oh, thank God, now I have a list of QSIPs. But
they can be hard to find if you're not used to looking for them. I can testify to that.
I think if my old friends hadn't called me an idiot, I would just have asked them for the QSIP. But since they were like, May, you're joking, right? You're not asking me about this. I was like, okay.
All right.
But yeah, so the leverage on the bonds. Now, in fairness, there was a Twitter space I was in at that time, and someone suggested that the 2027s were more his style because they had less risk. And I should have bought them like immediately because I think at that time they were still trading below 70. And I think I got some like well below 70, maybe 65. I think I got the first set of 2025s at like $68 or something and change. And so then after that, it's just whenever I could actually get them under 73, I tried to do that. That's why that doesn't show as much of a gain. But that also, by the way, has to trade to 100 by expiration. So no matter what, between now and 9/29, provided this company doesn't go bankrupt, that thing, I'll make at least the 25% plus whatever the interest rate is, which is going to be 5 divided by 71, which is my cost basis. There's a lot of math. So 8% on the rate, on the dividend, and then another 20 something percent, whatever's remaining.
Not a bad day's work, May.
Yeah, I feel really good about it. I know some of you guys are all about the MOAS. Some of you guys are like 300% to the moon, girl. That's what I need. And hey, you know what? Nothing but support, because that will definitely make my bonds worth something. So
I see you catching a lot of flack for being a bond buyer in the first place, which I don't get. Yeah. Expand your mind, guys. Buying bonds, especially bonds that are beaten down and you still believe in the company, as you can see with May's gains there, can be a very smart play. Can be.
Ever since Ape became part of AMC, ever since the bankruptcy was no longer a problem, right? Ever since it became clear that this company had more options for funding, because you got to think too, in December, as much as like the current price that it's doing these debt exchanges at sucks, quite frankly, the previous the first debt exchange in December was done even lower and was done at a discount to where the stock traded for a reason. They had zero negotiating power with Antara, because basically if that lawsuit happened, Antara would eat every bit of it, and they would eat it faster with the equity than they would with the debt. So there was, so the fact that they did any of the debt to equity was actually gave you a sense that Antara was willing to come talk about it.
Right.
So look, am I going to paint the debt holders as these like crystal clean, like squeaky clean people? You know what? They got theirs. I'm not going to lie. Did it suck that they brought the equity down and that debt for equity exchange? 100%. Do I at least understand why they did it? And I do. It's a little bit annoying. Yeah, it is a little bit annoying.
It's annoying for everybody, but I think getting over that hurdle of understanding the why is where a lot of people, they need that extra push, and they don't want to understand the why. They just want their way. And this is stock market, May. We're not
Yeah.
always going to get our way. We don't
Yeah.
have, you know, we don't have $2 billion worth of bonds, and we don't have the leverage, the
Yeah.
power to make those type of negotiations.
Yeah. I will, I want to just answer Tech We Love. This is a really good point. I want to tell you why I had a hard time buying them. I had a hard time buying them because I'd not bought them off of this platform before. I never, I never bought them off of E-Trade before. I'll just be honest. Before AMC, I never bought bonds on E-Trade. Okay. It turns out it took me that long to figure it out, but it also took me a little bit to realize, because my experience with bonds, I always had a Bloomberg back in the day. Okay. I haven't had a Bloomberg for like almost a decade at this point, at least 5 years. Okay. So I don't have a Bloomberg. So I was like very confused as to how to even go about it. If someone on this wants to just post and then tag me and Tony, and if they have access to a Bloomberg and you want to just pull up all of AMC's debt and then just show the QSIP, all you really need is the QSIP as the because the QSIP, just like the ticker is the identifier for a piece of stock, the QSIP is basically the ticker for a bond.
I bet, May, that exists out on Reddit somewhere.
Oh,
I'll take a look. I'll take a look.
Somebody has it for sure, because I've seen it before. But if you have the QSIP, then you have essentially the ticker. And that was my issue with why I couldn't buy it. So anyone can buy these bonds. Now, the little sub notes there is, number one, if you're not all brokers are actually licensed to sell bonds. Okay. And number two, which is a really big deal. Oh, super. Sparky, you're awesome. If you could just take a screenshot and send it to Tony, I'm sure he'll post it, or you can post it yourself and just tag us. Either way, my friend, that's super cool. But the point is that where am I at? Oh yeah. So if you go to so on E-Trade, if you type in the identifier as the QSIP, it'll pull up that bond for you. And most likely Morgan Stanley does not have it in inventory, meaning because this is not stock where it just trades on the exchange, et cetera, this is actually, they have to go and find someone that actually physically owns those bonds. And then they have to get a bid or an offer depending on what you request that you need. If you're trying to buy them, obviously they need to get an offer to sell. If you're trying to sell them, they need to get an offer to buy. And so it's a little bit on the manual side, even though a lot of it has been automated over the last decade, but that's what's happening. If that didn't make sense, keep posting questions, because it shouldn't be a mystery. And then also, if you have the QSIP and you happen to have a broker, just call your broker and be like, yo, can you walk me through how to buy this particular QSIP? Or if you don't want to buy it because you have to have, it's usually a minimum of 5,000 face value. So 5,000 face value, if you look at these bonds, if you were to buy the 25s, I'm not telling you to buy any of these, by the way. Okay. You
Right.
do you. Okay. Zero. I'm just telling you what is the actual process. So if you were to buy this, they would ask you to buy at least 5,000 face value of it, which would mean you would multiply the 5,000 by 0.71. So 71% of the 5,000, that would be your cost for the bonds. And so because they're asking you to, even though each bond is 1,000, they want you to buy a minimum of 5.
Right.
Okay. So then that's what the jargon is when they're saying it trades at 71 cents on the dollar. It's because they're just saying you multiply whatever is the face value by 0.71, which is what the price is. If that didn't make sense, also put it in the notes, because I'll go through that. It's no big deal.
I see Wired Ape says he listed all the QSIPs. Did you put them on as a comment to this video, or where did you post them? And also Wired Ape says he hopes that May is going to be our white knight to pay off all the bonds.
No, listen, I'm still going to have to dig into base capital just to pay for my teeth. Okay. So
let's see. Let me
That's a lot
go
of money.
with,
I don't think you guys, $1 billion is a lot of money. So okay. Look, I am obviously very positive AMC. I am absolutely nibbling. I've definitely enjoyed, I never want the stock to do bad, but when it does poorly, I am nibbling to get what ultimately will be my full position. Okay. So I definitely did buy some AMC this week. Okay. For
and
sure.
Just speaking in generalities, May, you probably, I'm just going to say an assumption, and correct me if I'm wrong, you feel pretty good about the value of your bonds increasing because the chance of the company going bankrupt is now lower now that they have access to more liquidity. Is that right?
Yes. And actually, I forgot to pull these 2 slides, so I'll get them prepped. But yeah, so essentially, let me see if this pulls it up. So I've
Well,
felt good about it since I bought it, to be honest, because I just don't
are,
think they're going to go bankrupt.
are you long the equity right now too, or are you just
Yes,
doing bond
I
trading?
I started buying it. At first, I wanted to see where it settled, and then I couldn't figure out what the short sellers were doing. Here's the problem: is the meme stock guys, and then the short sellers. You guys are like really aggressive. You're way more aggressive, and so as much as I want to be supportive, like there's only one. When I see something that crazy, I still have to buy it slowly. Okay,
Yeah.
like I'm like maybe I just take, if I so like usually I might divide it into like a fifth, a fifth, a fifth. But because AMC is so crazy, I've actually divided into like a 20th, a 20th, a 20th for what
I
positions I
call
want
it
to.
nibbling because I've been nibbling. I nibbled a
Yeah.
lot last week, but I still
Yes.
don't know that we're at the bottom 100%. But
Yeah. So I have limit orders to buy below just because I don't know. You guys are nuts. Not you. This I think most of these people are pro
the
AMC.
shorts are punishing it, and the longs, are running out of money right now. But
Yeah, it's
we'll
just nuts.
talk about that after we get done with the debt questions. We can talk about the price of AMC.
Yeah, and there's and I definitely want to talk about that because there's another real nuance. I was talking to some folks, and there's other nuances to that that actually prevent institutional investors from coming in for at least the next few months. And I'd love to talk about that because it's
I
something
would
I
love
think
to
is
hear that. All
okay.
right, Teddy,
So
number 5. Teddy says, "What interest rate would fresh bonds come at?" He said 2031 bonds. Now that interest rates have shot up, but also the fact that the company is now in a far better financial position. So I'm not tracking the company's credit rating. I know it was near junk bond status.
yeah, so I want to
And
show you guys this because if like there's not a really good answer to this, but all bonds typically all bonds like if you go to Risk Nerd XYZ, they will all tell you the same thing. For all bonds, when you price them, let me see if I can share this. Ooh, share. Let me share this. If not, I'll have to do a cut and paste. Yeah. Can you share? Is that showing a
yep,
graph that you can share? Okay. Yeah.
yep,
So all bonds price, there's a component that's just the interest rate. So the interest rates right now on 5-year are something. I don't know what it is. What's the 5-year bond trade? Somebody put it in the notes or something. So whatever the 5-year bond is, let's call it 5%, just to keep the numbers round, right? That's the interest rate, right? And it legitimately is okay to then add the credit spread associated with it, the high yield credit spread. So actually, this chart comes off the Federal Reserve, and you can see, and it would never just be the lowest point on this graph, because of course it's not going to be the lowest point on this graph. It'd be some kind of approximate amalgamation, but you would basically add this on, and that would be the very lowest you could possibly charge, right? Because then above and beyond that risk is company specific risk.
right.
Okay. So if it helps you in your head to think about, was 12% a decent rate? Yeah, it's actually what you would have gotten. And if anything, you can see where the high yield index, this is high yield index option adjusted spread. It's the OAS, but this is actually what, if you were going to do specifically what I said, which is like piece together what the different yields would be, this would be one of the many graphs that you would look at to try to figure that out. But it's super imperfect because whatever that last piece is, which is the company specific risk, that could be whatever they decide it is, given the fact that people are freaked out about the bonds, right? So like if you could be like awesome company XYZ, or sorry, let's say like you have a bunch of debt, all this stuff is true, and then they could give you some crazy rate because they specifically don't trust you to pay it back. Do you know what I mean? Like
Yeah.
maybe you were, look, I know I don't want to get political, but potentially you were a former very famous government official that actually was cool with the company going bankrupt. Then maybe your company specific risk is actually much higher. Okay, not political, just stating how
Let,
someone might potentially think about it. All
let,
right.
let's dial it into specifics, May, because I want to try and answer his question. Like, if they are able to roll the 2026 out to 2031, do you think it'll be like if they did it in the next month? I think it'll be middle of this year. But if they did it right now, would it be a similar interest rate, like 12%? Would
I
it
think it
be
would be close
higher?
to 12. I mean, I think if they got close to 12, that would be fair. If they got above 12, there's probably reasons that they could talk about as to why. I would, because this market is a little bit nuts. You know what I mean?
And more importantly to me is
It has
just
nothing to do
getting the
with that.
2026 off the calendar. We need to push it out.
I mean, I think if it was a banker, you know, and I don't know, the bankers, the way, you know, the bankers are legitimately smart people. Like, I'm not going to even pretend that I know more than them, because it's just false. And also, when they go to do this kind of stuff, they talk to like the other desks that are in the bank. Well, they don't talk to them. They they talk to him about how to price, but they don't necessarily talk to him about anything else, because they gotta be really careful, right? There's like very specific things that they're not allowed to do. But they have all of the research of that firm to think about how to properly price all pieces of this debt. And also, they may just find and then, even all of that, ignoring all of that, it may just be that there was one investor that is happy to do it at a very specific price, and then that sets the price even above and beyond anything else. Because the debt markets are liquid, but you know, I would say, I would call the high yield debt markets semi liquid. Maybe other people don't like that as a word. I don't care. You know, they're not on this show right now. You want to get on this show right now? You need to talk to Tony or talk to me, and I'll do a separate meeting with you. You can argue your case. But it's not a super liquid market like equities, where you can just arbitrarily find people to take, you know, $100 million down in a clip. So they can, it sometimes even above and beyond all of the logic. And realize, like, if someone comes in from a big investment house, they're also going to have some nerd on the other side doing approximately what I said. And then there's going to be another set of nerds that do a bunch of company research to get a sense for what the probability is of being paid back. And between all of those nerds, they're going to figure out what they're happy to pay for it.
Right.
A lot of
So
nerds.
I guess it's safe to say we don't know exactly what the rate would be. But is
No,
it
but if you
fair
were
to
like,
say,
hey,
is it fair to say that the more important metric is getting 2026 off of the slate and pushing it out, because that gives you more runway to get back into profitability?
I mean, you'll be taking 2026 and pushing it 5 years back, and then, you know, the rate, if they get approximately 12%, given where so I think they wait until rates, like you've got right now, you know, part of the reason I care about macro is because it affects all funding costs for all companies. That's, if it wasn't that, I would just let the macro people kill each other, because they love killing each other on Twitter. Like, as you, it's like, I think AMC and GameStop are the only stocks that rival the FinTwits that do macro as much as like they're trolling. Is really impressive. I really should just write about flowers in the future or something. But okay, so like, but if my I don't have a scientific way that I'm doing it, but I do actually agree with those that think that easing will happen this year. And I recently posted how I felt about the probabilities non-scientifically, just in my head. So I currently feel, without more data coming out, without hearing any other companies report, which they will all report in like a week, I currently feel that you've got a 30% chance that they lower rates in the second quarter, a 70% chance that that is not going to happen. I think you have a 50% chance they lower in the third quarter, a 50% chance that that doesn't happen. And I think you've got a 70% chance that happens in the fourth quarter and a 30% chance that doesn't happen. And there are people that think I'm too conservative, and there are people that think I've lost my mind. But if I were to guess, if a banker was talking to AMC, they would be more interested in refining that debt in the third or fourth quarter, probably the
Okay.
fourth quarter, probably around Christmas, quite frankly, yet again,
Okay.
to make it exciting for all of us.
Sparky says they could not issue new debt lower than that at the same rating level. That's why AMC is buying big discount.
Yeah.
I don't think at this point I'm thinking that AMC is going to get a lower rate.
So right now,
At this point, like if they were to do it right now.
If they were to do it right now, I would say that's a bad idea, to be honest. Like I said, I think that since those are my probabilities for rate changes throughout the year, they would be smarter to just give it 6 months and see what's up. Now,
Right.
if they thought the environment was going to get way worse, then yeah, you should do it right now. But like if suddenly tomorrow everybody's like, "Oh my god, inflation's going to start up again like hardcore." Which that's not a zero probability either, right? But I think it's a lower probability than that they're going to lower rates in the back half of the year. Given that, I would really prefer they not do it unless two things. Number one, the debt holders just got really nice all of a sudden and we're like, listen, this is what we're going to do, and just like totally did something that we couldn't even possibly conceptualize that they did on renegotiating. So that's the first one. The second thing is if for some reason someone comes in and says, you know what, I'm happy to do this via a convertible bond, because the convertible bond rate will necessarily be lower than all of these rates because there's a conversion feature in there that has value that has to mark against the debt. And I posted something like that. I know that this part of this, like the probability of a convertible bond guy coming in and being like, yeah, I'll totally help you out is not high. Let's just say it is low. But if for some reason someone did that, that would actually solve the problem tomorrow. And you should have both the debt and the equity trade up.
It would solve the problem for AMC interest rate wise, but it would be something that equity owners, shareholders would want to be aware of, that now we got a convertible again.
Well, it would be, yeah. And there's a nuance to this though, because depending on then it would come down to what exactly were the terms of that convert. Now, the beauty of a convert is that it doesn't convert until those terms are met. So you would have dilution. So anyone doing market valuation would have to divide the share count by the dilution of that convert. Every freaking day of the week, you'd have to include a fully diluted shares outstanding. And you can make some adjustments for it because I've seen that before. But the fully diluted shares outstanding would include whatever the dilution might be from the convert. However, would those shares exist to be traded and shorted? No, they would not. So there is that as well. So that's why I'm like, you know what, that could be actually a quite elegant solution.
All right. Well, we'll have to keep our eyes open. I think, May, that we will see something in 2024. I got my money on middle of the year. You got your money on end of the year. And let's see what happens.
Oh, you mean when they
on the renegotiation announcement?
I mean, in fairness, it's a little aggressive to wait until the fourth quarter, but
but it might be better, right?
Might be the right call, yeah. But it's aggressive. It is aggressive. So in a lot of ways, you got the better odds by saying third quarter.
It's aggressive because the longer they delay it, you got more overhang of people getting worried.
Yeah.
Teddy says, number 6, do the negotiated bond sales. I'm assuming, Teddy, that you're asking about the debt for equity swaps that we saw in December, but I don't know. He says, do the negotiated bond sales tend to be before the end of the year, as people can use them as tax losses or gains? Therefore, we can expect a reduced amount of negotiated deals now that we're in the new year.
Okay.
As I read that, do you think that he's talking about the 3 or 4 debt for equity swaps, or is he asking a different question?
No, I think that's what he's talking about. Now, I felt like those were definitely tax loss sales. I have not been able to confirm that, but I think that was because it was, in a lot of ways, it was beautiful because where the bonds marked last year was low, like super low. Like, at a minimum, they've increased in value by, even during the lawsuit, I think they were in the low 60s. So now they're almost 80. So you've got whatever, let's call it 20 because I wasn't watching it in January, but let's call it 20 just to keep the math simple. 20 divided by 60 is a really nice return, especially for a fund that probably levered that investment to begin with, to be honest. So it would make sense for them to go ahead and take the gain from the perspective of what they report to their investors, but the loss from the perspective of what the bonds traded at. So like if they had done the deal at like 90 cents on the dollar, so let's say they bought the bonds at 90 or when issued, I would assume it was something like that. Or maybe they bought them at 100 when issued and it was all rates. I don't actually know the specific terms of this bond well enough to know what it was at issue. Anyways, they have that whole spread. That's still like a 20% L that they're taking from an accounting perspective if they go and, but then on the other side of it, they're taking a W because they're telling their investors, which is true, that over the course of the year, those bonds did really well, which is true, So to me, I think that I think it was tax loss selling, but we won't know until somebody says something, like really confirms that, or we may never know, and that is what it is. Will we see less of them going forward? I think it kind of depends, because, the reason I think it depends is, like right now, I would imagine, and also it kind of is what he talks about on the call. The debt is it's like priority one. I mean, all of the growth objectives and getting revenue up and profitability up is probably priority one. So this is like right behind priority one. So whatever they can get those guys to agree to that takes the debt burden off is great, because it's kind of like, you know, if you're about to take out a big loan, you might pay off other loans just so that you clean up how things look on your on your statements before you go to the bank. Now, the second part, which was the question, was, does it mean that nothing happens and then we wait until the end of the year before we hear all of it? Like I said, that's not a zero. Actually has a decent probability as well, right? Because we know already that so you've got the first quarter will be weird, or this next quarter reported, which is technically the fourth quarter. That one's going to be weird. We know that. Okay. And then you've got spring and summer. We don't know yet how that's going to go. I mean, people are making conjectures about how the box might go, but we don't really know. I mean, like, even if you thought Barbie was going to do awesome and Oppenheimer was going to, there's no way that you foresaw Barbenheimer. Okay. Like,
Right.
if you did, high five to you. Right.
I
So
had
we
a
don't.
couple people that told me that it was going to blow it out, and I was like, no way. And they were right, and I was wrong. So you
Yeah.
never
So
know, May. You never know.
you really don't know what's going to like spark everybody's fancy. I mean, so you don't know, but there's the possibility that you have this amazing year. Plus, we still don't know what the concert business is going to do and what it actually makes for them every year. So if like, say he announces this wonderful slate of concerts that are like Taylor Swift-esque, you know, then that probably changes the profitability of the company. And so you probably could pay down that debt enough to where by the time you go to refi and talk to Antara about it, you would want to wait until like that third or fourth quarter to have that conversation versus having it in the first quarter. So it's a good question. I don't know the answer, but that's
Okay.
how I'm thinking about it. Yeah.
All right. Number 7 from Teddy. With the main debt being over 2 years away, at what point is Adam Aaron or the board likely to take their foot off the pedal and let the stock breathe a little? Off the pedal in terms of dilution, in terms of, I'm assuming, debt for equity swaps. I'm going to share my thoughts, but I want to hear your thoughts first.
I mean, if he can get rid of the debt by diluting and make his negotiating power on at the end of the year better, I'm pretty sure that he's thinking about it as a short-term loss for a long-term gain. Because for a CEO who's got to stick around for a while, he's going to be thinking, if I could just get past this and get that debt or that interest payment is like just under 100 million a year, so he automatically gets just cash money coming back at like almost 100 million a quarter. Sorry, a quarter. Right? It's like 93 this last quarter or something like that.
Yep.
So if he could get like 300 million just from interest payments back, he probably won't get all of it. But if he could get 100 million off of it, I think he would be like, yeah, I'd rather do that, get this debt refied, keep funding growth, keep letting the company like try to actually get cash flow positive, and then buy back stock maybe 2
When
or
you're
3
talking
years.
about money coming back, are you saying like if they pay down the debt, then that reduces their interest payments? Yeah. So I think I saw on a slide deck that if they pay off 400 million in debt over like 3 years, that's 200 million back to them and reduced
A
cost.
year, right?
No, over 2 or 3 years.
Oh yeah. Okay. Yeah. That makes sense to me.
So yeah, and they have reduced debt approximately 400 million in the last several quarters.
Yeah.
So that is even though it's painful to deal with the dilution, that is $200 million more coming to AMC that they don't have to spend, right? Reduce costs.
Yeah. I mean, I don't, because MOAS aside, because in fairness, MOAS has happened that have nothing to do with this. Like this is slow burn conversation. All the stuff we're talking about is the slow burn underneath. A MOAS can happen whenever it happens. So you guys, as you know, I never comment on that. That is a very different skill set. But we're just talking about like, what would you do for the health of the company? I still remind people, that the way that I'm looking at it, I don't care how you're looking at it, you do you, but like the way I'm looking at it is that in 2000 and not before COVID, 2000, the year end 2019, 2020 annual report, whatever you want to call it, it was almost just under 600 million in operating cash flow, 500 and change in capex. And looking at those numbers, given that capex was mostly growth capex, right? 300 was to try to upgrade theaters, buy theaters, etc. If he could get all of that done, then this company throws off 400 million in an 11 billion market, assuming no changes, which the company's actually more
Right.
profitable.
We were talking about that around those numbers last night.
Yeah. So like if you throw off 400 million on a very average market, after you get all this nonsense out of the way, then get the nonsense out of the way and start throwing off cash, because you'll pay back that debt faster. That's how I'm thinking about it. But I know that people are like, well, between then and now is a bumpy ride. And that's true.
That is true. We got to survive 2024, which is why he did the 2 ATMs.
My thing. It's a bumpy ride, but it's not a ride where you see bankruptcy. In order to see bankruptcy at this point, you really have to have the debtors be hell-bent to like take it to bankruptcy court versus allowing it to actually do exactly what you do if you took it to bankruptcy court.
And I don't see anybody pushing for that. And I don't see the board looking through all their slide decks from 2021 that were in the discovery. There was no talk about, let's make sure we bankrupt the company. They were multi-page slide decks of how do we fucking avoid bankruptcy.
Yeah.
And they were looking at every, leaving no stone unturned. And all of that information is available to you guys in the
it's all public
in the plaintiff's 900-page court documents. All the slide decks of the board meetings. There's no, I see zero.
It doesn't make any sense. Yeah,
I see zero from this board where they're trying to figure out how to bankrupt the company. It's the exact opposite. What do we do to avoid bankruptcy?
Yeah, I mean, imagine all of this stuff that everybody's complaining about as relates to the stock equity awards. That all goes to zero, by the way, if it goes bankrupt. So then that whole discussion about being paid in equity is a moot point, because if you think it's going bankrupt, then why would you even be discussing any of those options as a problem? Right? You know what I mean? Like, it's the most like there's a circularity to these arguments that doesn't make sense to me. Do I think it's bumpy? Yeah, it's bumpy. I think that, and do I think he could dilute in order to get it done? Yeah. And you just be thinking about those numbers. Can he get it back to where it looks like you could make 600 million in operating income and 200 million in capex, such that you're throwing off 400 million a year? Because 400 million a year will pay back $4 billion, no problem.
And a lot of that is dependent on the company getting back to, the box office getting back to like 10.5, 11 billion, right?
Doesn't have to go all the way to 11 billion anymore. That's what's exciting. And if the concert business gets bigger, it doesn't have to go back to 11 billion. Let's just finish it at that. That would be the dream. That's why I'm really excited for the concert business.
I think the people that are being overly pessimistic are being overly pessimistic. Like they don't look at the finances. They just look at the pain, the very real pain that we're experiencing right now. And they can't think out a year, and they've never opened an income statement or a balance sheet to understand the struggles and understand what is being done. And that is why we're here tonight, right? To talk about the finances, to try and educate people a little bit more.
It's a turnaround stories, and turnaround stories are even hard for people that like turnaround stories is not everybody's cup of tea. Even on like, it's not, because like usually you're just like, oh, the growth and then the margins and then call it a day. But there's actually, if you think about it, several new businesses. The one that's probably the most interesting really is the concert business, because it's already bringing in a lot of revenue and it's actually profitable. Usually new business ventures that you put in, they're not profitable for a while. There was no extra work that had to be done to actually slot this right through. That is something for sure the shorts have not even remotely thought. Like these estimates that came out, you're going to pretend to me that guy who put that price target of 6% had anything related to how many concerts he thought would going to happen in 20. BS is what I have to say to that. Oh, that reminds me. There is this one really weird nuance. And this is something that I haven't fully processed it, but I know it to be true at this point. And it's a really unfortunate thing because it's part of this meme stuff. Right. I think that if you're an institutional investor, the way that it works is that you have to decide. And very rarely are you the only person that gets to decide before you say yes. Like oftentimes there might be a committee that it has to go through and they have to approve it. And then there might be other considerations. There might be like you might be only a portfolio manager and there's a chief investment officer who gets to veto you, all this stuff, right? It turns out my suspicion is that with AMC, if you're like any kind of investor that is more conservative, not conservative in the way that you invest, conservative in the type of press that you want for the firm, then you may not, even if you agreed with everything we just said, you still might not be able to buy AMC equity until either enough time passes where there's a calmness to this, or this thing starts to get so until we are not trolled anymore. Essentially,
Right.
like that is
the institutions are probably far more conservative than us and far more less willing to take losses.
Yeah.
And they don't want to be embarrassed in front of that committee that you're talking about. Oh, I recommended this and the committee signed off on it. Now we're down 20%. Like that'll ruin your career. So I agree with you, May. Like there will be a point where the price gets low enough and the fundamentals get good enough that institutions start buying again.
Yeah. And I mean, I think if this quarter comes in more profitable than expected and or also something weird happens with the debt in a positive way, remember, like, and I'd mentioned this and enterprise value, like I'm going to use enterprise value to EBITDA if I'm going to compare it to like Cinemark. And some people are like, but the debt, blah, 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 it doesn't make any sense. PE, blah, blah, blah. I prefer to use PE. But here's the thing is that if people are using enterprise value to EBITDA or enterprise value to earnings, either one, I don't care, as a means of incorporating all that extra debt, once you pay the debt, enterprise value becomes significantly lower. So your PE becomes higher, right? Wait, did I do that right? So yeah, because the market cap comes because you're replacing market cap with enterprise value. Enterprise value is market cap plus the debt. If the debt declines, the price declines. So the multiple is actually more attractive because earnings doesn't change.
But you're talking about paying debt. That's like you're talking a couple years from now, right?
No, I'm just saying if he becomes profitable, or like, for example, these dilutive things, like let's say if tomorrow he was like, you know, if people, let's say people were using enterprise value to EBITDA, and I don't know what the metric is today because the stock's all over the place. Do you know do you have a really quick way to do?
Yeah.
Let me just look.
I might. I have, no, I closed that tab. Let me try and pull it up. What metric are we looking at? EBITDA to what?
EV to EBITDA. I'm going to pull it off of Yahoo Finance, but oftentimes they screw up and put the wrong number in, but we'll just do it that way. But you really need, because everybody gets a share count wrong, you have to really actually calculate it. Okay. So they're saying EV to EBITDA is 33.7 times versus.
I have 37.7.
Okay.
EV to EBITDA.
Right. And that's because, so it's got to be, so 1.2 billion, or I guess we can just talk through it. Okay. First of all, this is a crazy calculation. 1.28 billion. And then they say that it's 8 billion in debt to give you 9.87 billion in debt. And I say, and we should talk about this because I have very passionate feelings about this. I say that these people that would include operating leases in the debt have no concept of how real estate works, period. I'm just going to say it really, really triggering, get the people really mad. I might as well go for broke so you can take the sound clip and then, burn me at the stake. But I'm just going to say it. And I'm going to explain very clearly why anyone that thinks a landlord is going to take AMC to bankruptcy court has potentially misunderstood what it means to be a landlord. Okay. Potentially. Let's talk about this for a second. And he said this on the call, but I can tell that it probably wasn't that obvious. Let's say your AMC is located in a mall that has a Capitol Grill. Okay. Let's say it has a Capitol Grill. If AMC, now let's talk about like if AMC, if you kicked out AMC, you now have an empty theater. And then there's all these people who be like, but Amazon would buy it, whatever. Now I want you to imagine if Amazon bought that property and now you have an Amazon distribution center in a mall with a Capitol Grill. Do you think that that's what the landlord is trying to do with that property? No, absolutely not. He wants it to be a fancy, enjoyable entertainment destination. That's why when he said on the call, some of our landlords are even like, I don't care if you pay rent at all, just stay there. Do you know what I mean? That's
It's
the
a lot of foot
negotiation.
traffic.
It's a lot of foot traffic. It's just flat out. Thank you. And
Yeah, and there's 3 AMC's here. One's in the mall, and I guarantee you, every time we leave that movie, we go to the mall, whether it's
exactly.
GameStop or Yankee Candle, wherever my wife wants to go. That's what they want, right?
Or to go get a soda, like whatever it is. Now you should be buying your sodas at AMC, peoples. Okay.
We got hit up by the popcorn stand on our way out of our last movie, and we're like, no, thank you. We just had the best popcorn on the planet at
Exactly.
AMC Theater. But
Okay. But nonetheless, people hear me on this. Those leases are absolutely negotiable, and those people are not going to take them to bankruptcy court over what really, because your typical landlord of that size is also a business owner and also understands business cycle, what have you, and they understand that they might have to work it out. And by the way, most of their remaining landlords have a lot of other properties that are extremely financially solvent, so they can actually chill, and they are willing to chill. And he talked on the call that they're willing to chill. So the idea that the other 4 billion in debt the 4 billion in operating leases is going to behave like the 4 billion in debt demonstrates a lack of understanding of what means operating lease, quite frankly.
yeah.
So,
And I was looking, May, at Q4 at the deferred rent that they had left on the books. They had, the landlords were working with them to defer rent in 2020. I think that there's a good shot that they will completely pay that off in Q4.
yeah, I mean, deferred rent is not that bad. And I think that the landlords have been really helpful. And we've got a couple of people that are like, malls already have empty spaces. Yeah, some malls do, some malls don't. Like there's a couple of REITs that actually have 97% occupancy. Those are actually more likely to have an AMC in it than the ones where you just have like dead space that's going to be taken over by a government agency that just needs office space on the cheap. Okay. So you don't get confused. This isn't all malls. Okay. This is the malls that specifically AMC chose, and that the developer of that mall, the real estate investment trust of that mall, is actually trying to do something very specific with that real estate. So,
I guess my point with the deferred rent is, like, everyone's saying, where'd the money go? That $1 billion, 1.8, whatever that they had. They've had a lot of freaking, besides the ongoing costs, they've been paying back deferred rent.
yeah, they have.
Once that is done, that's another, I forget what it is, but let's say 100 million a quarter straight to the bottom line, because you're not having to pay that deferred rent, that big obligation they have sitting out there.
Yes.
There's a lot of good things that are coming.
Yeah. So right now, for whatever reason, if you're doing EV to EBITDA, people are including the operating leases. You could do it either way, but that's why it's 9 billion divided by whatever earnings is, or whatever EBITDA is. Okay. But if you get rid of the operating lease issue, or you start to, bring that in, and you get rid of the debt, you bring in the top, the numerator, which brings down the metric, the EV to EBITDA metric, and slowly but surely you get almost a leverage on that. So the more debt you pay down, the more the actual valuation just really shifts aggressively. That's the danger of being short this thing, and which is why I don't short AMC ever. I don't short AMC ever because I just, on principle at this point, I can't. You know what I mean? I just won't. Not I can't. I won't. Of course I could if I wanted to, but I would feel horrible, and I just won't do it on principle. I'd rather just go long the stock when I can.
Wired Ape says that AMC's book value is about to go positive. Book value is what, shareholders' equity divided by the number of shares, or book value per share?
You got to just take the
we have a huge negative shareholders' equity.
Yeah, that's your problem.
I don't know that it could go positive anytime soon. I mean, it's like $7 billion negative.
Yeah, book value's no going positive until you get rid of that debt. So unfortunately, and to be fair, there are very few industries trade at 1 times book value anymore. The biggest exception to that is the banks. The banks trade at 1 times book value. They used to trade way higher than that, but ever since Lehman Brothers, they've never traded higher than that. I think it's actually kind of crazy they don't trade higher than that, to be fair, because even I'm talking about just the banks, because the asset managers even trade at greater than 1 times book. But the reason they don't trade more than 1 times book is because the like when they unwind, they really unwind.
I was way wrong. Shareholders' equity is negative $2 billion.
Yeah.
I'm glad I was wrong that much, but still, I mean,
yeah, it wouldn't make sense. Like to collapse the company now, the only way that you're getting your money as a debt holder is to bring in another management team, and you're really rolling the dice. Plus, you'd have to bring in at first a temporary CEO, right? And that guy usually sits there for a year because the CEO's a fast CEO search would be 6 months, but a CEO search like this would probably take a year, easy, unless magically the management already had someone in mind. And then the temporary CEO would go for a year. It's a little bit awkward to the company, and then from there you'd see what happened. But meanwhile, that would be really dangerous to do it right now because you still have all this debt that has to be renegotiated at the end of this year. So to change CEOs in the middle of that would freak any investor out interested on the debt, on helping to refi the debt.
So let's hit a couple of questions from the chat. And I think Teddy's last question is, where can he get a place to go find these bonds easy? If Wired Ape sent me the QSIPs, I'll do a video or a post and put those out for you guys so you can go find the bonds.
I like that.
Let's see. I'm going to kind of work my way backwards here. Dustin says, first of all, they want to know what you're drinking. Why do you have ice in your red wine?
Oh, this is actually a sweet Shiraz, which is nothing special. There's actually this company called Jar Jam. This is not an expensive wine, okay? I'm going to just say it's a little bit of a ghetto wine, but I like it. Okay, I actually like it. So basically, I did not know that Shiraz could be sweet. And so when I first saw it, I was like, all right, I'm game. I'll try it. But it is actually really delicious. It tastes like alcoholic grape juice. And then some people were like, May, could you just drink grape juice like a normal person? I'm like, no. But it's a really nice little yummy thing. But because it's sweet and because it is a Shiraz, the proof is a little bit on the high side. I'm not going to lie. So I water it down with ice so it just tastes like an ice grape.
All right. As long as you're not icing down some Italian wine, we can still be friends, May.
No, I mean, if anything, it's more like a dessert wine because it's very sweet.
All right. Dustin says, what would you say is the biggest obstacle in AMC's way going forward?
Oh my gosh. I mean, all things being equal, it's the debt. And then I'm excited to see whether or not these movies do okay this year. Like everything else that I have is a question on growth, the unknowns on growth. There's really the debt, refining that stuff and what rate will be. That's like such a crazy unknown that I kind of want, yeah.
I have the same answer, but flipped in order of importance. So I'm more concerned about the top line revenue. I want to see the box office recover.
Yeah.
And I'm worried about the debt, but I'm more confident that they'll be able to push the debt out. So there's more overhang, more worry for me. What if the box office doesn't get to 10 or 11 billion? So that's the number I'm really worried about.
That makes sense to me. I mean, they're right. They're right on top of each other because if you get a good box, if you get another Barbenheimer, then they're going to be able to pay down that debt because now that they've done all the things that they've done, that if you had identically 2 films, Barbenheimer crushing it in the summer, the profitability of that is higher than it was last year.
Anthony Manzano says, do you guys think AMC got over lion on the meme stock fad? I don't know what he means over lion, but let me keep reading. Over reliant maybe on the meme stock fad and thought it was going to happen to them again, where a whole bunch of people panicked and bought their stock, like in a FOMO run up, I'm guessing is what his question is.
I don't know the answer to that. It's a good question. I mean, it was interesting because I think right after it happened, he seemed a little bit like the investors are always going to have my back, et cetera. And I don't know that it was over reliant, but I can see why some of his behaviors after that might have pissed off people a little bit.
Yeah, I mean,
I think
the community, you know, a certain segment of them have definitely turned very against him, a small segment.
yeah,
In fact, some of them were having space calls. I don't know if you saw these tweets, May, but they're planning not just protests, but violent protests. They're openly advocating for violence to the point where they get taken to jail to accost the CEO or Gary Gensler.
I'm
I
really sorry
said
how it's going.
it's really disheartening to hear that, you
Yeah.
know, that people would do that over a stock. But you know, people asked me a couple of years ago, what would make you get out of this play? And one of the things that I said, where I would have to reevaluate how I trade AMC, would be if the retail community got fragmented. And not only are we fragmented now, we have people fighting with each other, making death threats, violence threats, slurs, racism. It's really become toxic out there in the community.
I must
So
have really blocked the right people on my Twitter because
yeah, well, I block them and I don't interact with them, but
we used to see it and hear it.
Adam Aaron, you know, gets a lot of that hate too. So I don't know how he feels about having retail own his stock, because he's got to deal with a lot of bullshit. But I think the vast majority are still backing him, even though they're down. Right? They see the bigger picture.
I will say that if he starts spending in ways that make no sense, like if he doesn't address those two questions on the call and then starts saying something crazy out in left field, then I probably would be like, ooh, guys, I'm going to take a pause until such a time as I hear this. You know what I mean? Like
Two questions: the debt and the box office.
the debt and the profitability side of things, the revenue profitability. Like I'm expecting, this is what I would love if he would do this. Number one, last year, this time, he talked about how he felt about the movies and how they were going to go. And at that time last year, he actually did talk about Barbenheimer, if I remember correctly, and mentioned those two in particular for the summer season. So I would like to hear his thoughts on how his internal people think the movies are going to go, right? Because he's got a team of people that have probably been watching movies all their entire life, specifically doing this type of research. So I want to hear from him that things look good there. And I don't want it to be fake. Like, I want to understand why. Do you know what I mean? I don't want to hear just, oh, they're going to be great, blah, blah, blah. Like, I want to hear the specifics of what quarters he thinks is going to be good, that sort of thing. The second thing that would make me super happy is if he could be a lot crisper on what he thought he was going to do with the concert business. Number one, if it just dies with Beyonce, or if there's a bunch of other artists behind it, and what economics are they asking for? Like if he could just very specifically tell us what he thinks the profitability of that would be. And if he can't be specific, then be loose about it. I don't care, but just give me some sense for how to think about the profitability of that versus the film business, which I think is higher. That'd be awesome. Do you know what I mean? And then that would, because I actually think it's really smart to not be so dependent on Hollywood and the freakishly crazy situations that they've been getting themselves into on strikes. So that would be awesome. If there is greater clarity. So a lot of folks are talking about like popcorn and stuff like that. I think he needs another year before that stuff adds meaningfully. If somehow that's not true, I'd love to hear that. But usually what happens is when you grow a product, and this is what you used to do. I remember you told me this before. When you start a product, there's, the first whatever period of time is just ramping up that product.
Yep.
So I'm not expecting much, even though I think long-term, so the right call. I'm not expecting much from that in the way of like net income. I am expecting something on revenue, but I'm not expecting that to go all the way to net income or even to positively or negatively affect cash flow. Quite frankly.
Yeah, I talked about that in my Q4 earnings estimate video, the one that's going to drop right after this live stream. I am not counting any incremental income from retail sales of popcorn or credit cards or anything. It's just way too early in the product ramp. And they probably have some cost associated with that product. And I don't know how that's amortized, if it is.
Yeah.
But we have a couple quarters under the belt. And my model, my spreadsheet model, has been pretty dead on. There's space calls, May, where people are predicting wild numbers for popcorn. I've even maybe $1 billion. I don't know. But
I mean,
I think they have no actual business sense or understanding of how these things ramp.
Yeah.
And just be
I'm
caught, it's okay to be conservative on this stuff and allow the business
nice, actually.
that channel to grow.
Yeah.
It'll pay off if if people support the product, it'll take off. But
Yeah.
in the
And
beginning, just be conservative. It's
I do
okay.
think there's a little bit of a challenge. I do think there's a little bit of a challenge because he's going to want to grow. And this is his Achilles a little bit. Okay. He has a tendency to want to grow the business faster than his actual financials will allow. And so, for example, I think it's the right call to add on all those other products right now. But if he gets too wild and too crazy with that, then that is kind of like a, hey, let's just see how it goes, because he really does have to get that cash flow to a place where it's very clear he's got the ability to pay back the debt. He's got to do
Right.
that. He has to do that not to pay back the debt. He's got to do that for someone to actually roll his debt, to pay that debt, to be willing to like roll the debt back.
Yeah, and that is my concern, since he hasn't broken out any numbers on popcorn.
Hasn't. Yeah.
And obviously he can't break them out on the new chocolates because they're brand new. But like, until I hear him break it out, we don't even know if they're losing money on it right now, for all we know.
Yeah, and it's very common for you to lose money on new products. Now,
Yeah,
I don't
and
think
that would be okay. I mean, but
Yeah.
the fact that he hasn't talked about it kind of speaks volumes to me, and that's why I refuse to add it into my models.
Yeah. I'm hoping and thinking probably that at this point, you've had like, several quarters of it at this point, is probably break even is what my guess is, which is huge. If you break even in a year on a consumer product, that would be amazing. That's actually a big deal. That's like everybody gets a high five for that. So yeah, that would be the only thing. And you kind of want him to properly grow that business because it's a cool business long term.
All right, Anthony's asking a lot of questions about ArcLight theaters. Anthony, I'm just going to answer your question in generalities, and maybe I'll do a standalone video on this, and maybe May, you want to come in and talk about it in that video with me. But the whole roll-up strategy.
Oh, yeah.
So I think there's a huge misunderstanding out there pushed by the haters of AMC and the bears and the haters of Adam Aaron, how they got in all this debt. Can we just talk about that for a second?
I mean, their strategy was to buy up competitors and then reduce costs.
Right. So that's called a roll up. You guys can Google roll up strategy. This is no big secret, but I know all of y'all don't have the curiosity or the experience in finance to understand this stuff. And that's okay. That's why we're here. But when you execute a roll up strategy, and May correct me if I say anything wrong, you buy up competitors and you become ideally, the big giant on the block. And then you have economies of scale, right, that you can leverage. But in doing that roll up, you take on often, most times, a lot of debt. And that all works good. That's fine as long as the industry is still growing. And they had every indication that the industry was going to, if not stay stable at 11 billion, maybe even grow beyond that, when they bought all those theaters in 2016 and 2018, the competitors. And then COVID hit. And what's the worst thing that can happen when you have a leverage strategy?
No revenue, no income.
No revenue.
Yeah.
Right. So the idea that AMC took on all this debt to bankrupt the company, it was a master plan to bankrupt the company. That was not the plan. The plan was to execute a roll up, buy out all the competitors, become the big guy, and then just sit fat, dumb, and happy.
Oh, it's AMC Bigums. That's nice.
And that didn't happen. So now we have the worst possible situation trying to dig out from a leveraged strategy while the income, the revenue, the box office is not there to support the strategy they were working on. And so they're in a desperate scratch to get, to survive until it gets back. Is that a good summary?
Yeah. I mean, I didn't even realize that wasn't, I didn't realize the misunderstanding because, I'm a little bit later than you guys coming to learning.
The misunderstanding, May, is there are people that are saying with a lot of, I'm right, they took on all this debt to bankrupt the shareholders and rip off retail.
And, I would say too, and just to like why, when I read it, it was really straightforward. So I didn't even look twice at it, but I can see how if like, you're not, looking at other companies that might be doing something like this, you would be like, why? That totally makes sense to me now. but I would say that like at the time that he took on all that debt and at the time that he was doing, I mean, if you look at his corporate debt, like if we go back, here, I'm going to share my screen again. If we go back to, let's see, share. If you go back to the debt schedule, right, and you look at all these 2024s, this debt is at 6.375, 5.75, 5.875. And if you go backwards in time and you look at all the other like earlier 10Ks, the debt was really what you'd consider cheap. And so that strategy, I think it really can't be explained. It can't be just like if you're very new to looking at different types of strategies that people take to try to grow a firm and you've never looked at a roll-up strategy, which is a real thing, then the other piece of it is that rates were really low. And when rates are really low, it costs very little to do this type of strategy. So, on top of everything else, you had rates increase this crazy number this last year, which put even more pressure on all this. I mean, you got a little bit lucky in the first 2 years, but at the same time, this crazy inflation plus crazy rate increase is like, I mean, it's a really tough operating environment. But before that, roll up strategies would have made beyond sense. And in fact, you can like Live Nation, I think could probably be described as a roll-up strategy. I named a few that are like in the boring industries, but I think they're great. Pool Corp is one. Pool Corp basically is buying out every single mom and pop pool operator. And they're basically just, doing the Rollins Corp, which is basically the Orkin Man, has been buying up every mom and pop guy.
Yeah,
Because
I see it in my wife's industry, in the veterinarian industry. There's private
exactly.
equity buying up all the small clinics. Any privately owned doctor clinic that's willing to sell, they're buying them all up. That it's all this roll up. But
Yeah.
AMC is not a private equity owned company; it's a public company.
No, so
So
they just
that's another distinction that people muddy the waters on because of their lack of understanding of what they're talking about.
Yeah, that's probably fair. I mean, they're a theater trying to buy out their competitors so that they can then own more market share. And through the market share, I mean, here's the thing
There's
that
private equity buyouts, leverage buyouts, right, May?
yeah,
And then there's roll-ups of public companies. They're similar strategies, but they're not the same thing.
no, not even close. I mean, when a private company buys up its competitors, the major things they're looking to do is like they're trying to get like, if you can't buy a ticket at this theater, we'll go to our other AMC theater that is identical quality and get points for it, or get points across the entire system so that when you're looking for a theater in general, you're looking for AMC. Or like now that we have X number of theaters versus a smaller number than X, let's buy popcorn at scale. That's the kind of thing they're looking at in a roll up. Private equity companies are totally different.
Yeah, it just pisses me off that people make 50 videos saying they're the private equity expert and they don't even understand what a roll-up strategy of a public company is. I'm almost embarrassed for them. Anyways, moving on.
Trying to do their gig. I'm not going to be too mean.
Owning the Float says, I don't know if you and I have talked about this, May, but Owning the Float says, will AMC Goodwill take a hit on Q4 earnings? And side note, before you answer, he and I have we have a bet on this question.
Well,
so I don't know. Do you know much about Goodwill?
A little bit, but what specifically is, why are you guys?
With your experience that there's an annual requirement to do a Goodwill test, right? And AMC always does theirs in Q4. We already know that. However, the theory is that because the market cap dropped so precipitously that there will be a massive goodwill impairment, that some are even saying, by the way, they've been saying this for a year and they've been wrong 4 quarters in a row, but they're saying that all of the goodwill, $2.2 billion, will be written off in Q4 because of the market cap drop. And,
cash, though, so.
let me finish the story of why they're saying that.
Okay.
Because it is a fact that if you read the accounting rules, if the market cap drops, that obligates the company to do a goodwill test.
Okay.
However, and I could be wrong. I'm not an accountant, guys. But I've talked to a few, and even the ones I talked to can't give me a firm answer. So how some dumbass YouTuber who's not an accountant either thinks he has the answer, I'd call it a coin toss. But There are, from what I've read, May, exceptions that the company can make. Even if the market cap has dropped, yes, there will be a goodwill test. But is the company growing? Is the future cash flows growing? Then maybe you don't need a goodwill impairment.
I mean, the way that I'm thinking about it is goodwill impairments are usually non-cash. So if it helps,
It is non-cash, but
if it helps
it,
with the
it,
taxes,
it
do
affects the
it.
income statement and the balance sheet if it happens. So it's not going to be pretty if it happens.
You know, if that's the reason people sell it is because of a non-cash impairment that actually helps with the taxes, then I'm actually going to be happy to buy it with all due respect. I don't know another way to say it because like, come on, you know what I mean? Like there, if it were any other company than AMC, there would just be an adjusted number and we'd move on, right? Like to be honest, there's like so many random non-cash items that you look at and then you're like, wait, why is this drop so severe? And then you go and you look at like the adjusted number so you can agree or disagree with management. And then you use the adjusted number. AMC's special because the street doesn't cover them thoughtfully. Let me say it with lack of other way. It seems like a lot of people that cover AMC are either technical traders, which I have nothing against that, but then let's not pretend you actually did any fundamental work, right? Let's just say, hey, I'm a technician. Here's what it is. That's how I'm feeling. Boom, right? I won't have anything negative to say. But if you're going to pretend like you went through the financials and you clearly didn't, then that's painful, right? So let's move that to the left. But regardless, if it were any other industry where there's a lot of non-cash charges, there's this thing called adjusted earnings, adjusted EBITDA, adjusted earnings, adjusted blah, blah, blah. And then there'd be clear descriptions as to why that adjustment makes more sense. But again, we're looking at free cash flow. That's why like all the stuff, like right now, if AMC manages to pay as little taxes as possible, that would be my dream because I don't want them to allocate that cash to taxes. Sorry, I get it. The government works on taxes. Okay.
No,
Civic
you don't
duty.
have to apologize for that to this audience.
You
Trust
pay
me.
your tax. Yeah, you guys pay your taxes. I will pay my taxes. AMC, if you can take every write-off you possibly can to pay the least amount of taxes until you can actually get cash flow positive, please just go ahead and do, so like, and yeah, that's how I feel about it. I care about free cash flow is what I care about right now. I care about because the free cash flow is what you pay the debt back with. The net income right now, because of everything they've been doing, should be low. If for no other reason, then there should be a ton of impairments they're taking that are non-cash, and they should take them because the last thing I want is to increase tax expense. Sorry, that's how I'm feeling about it.
All right. So, I think that, if it happens, and my bet is it is not going to happen, but if it happens, there's going to be a lot of people that don't understand what it is, gnashing their teeth and wailing in the streets. Like, why did we have such a massive loss on the income statement? And we're going to have to do all the explaining that it was a non-cash expense, yada, yada, yada.
Good. I'll know what to do for my video. Thank you.
Yeah, we'll have something to talk about then. But all of the people that are like doomsdaying this over a potential goodwill write-off, it's really irrelevant.
Yeah. I mean, if
it happens, it's irrelevant.
That's how I feel about it. Sorry. I know there's some people that are very passionate, but I would say in general,
a lot of passionate people. OTF, Owning the Float, and I have a 12-pack of Celsius energy drinks bet on it. I think it's a 12-pack. Isn't that what we bet, OTF? Anyways, moving on. So yeah, I touched on that on my video, which is dropping after this live. Again, I'm not a degreed accountant, but I have spent a lot of time looking at this and talking to a lot of people, and I disagree with the narrative, but I could be wrong. And that's cool if I'm wrong. It's not going to hurt my feelings if I'm wrong.
Yeah. I mean, if this is out there as a concern, and let's see where it settles, and it just might mean that I get to pick up a little bit more.
I feel like it's almost like a little bit of bitterness, May, because GME had to write off all their goodwill. So this guy that's pushing this narrative is hoping that AMC has to write off all theirs so he can prove that GME, AMC is not a better company than GameStop. I think there's a little bit of that feuding going on in there.
What if he compares his children? I don't know.
I don't know.
Why would you do that? They're two totally different
GameStop was in a massive decline, and they had bought up cell phone companies and a bunch of other shit that wasn't working. Yeah. It wasn't working. They weren't making money. They had to write that all off because it was all failing. That's why they had their goodwill write-off.
I mean, a good fundamental investor is going to understand non-cash impairment. You know what I mean? And
Yeah.
in fact, they're going to be like, yeah, take the non-cash impairment. It's called lower taxes, my friend, because otherwise, whatever you don't do means that you've actually decided that you'd like to pay more taxes on behalf of shareholders, which is not cool.
All right. Well, if it happens in March, May, you and I will have something to talk about. How about that? And
Yeah.
if it doesn't,
That'll make it
we'll
easier
pop
for
a
me to do a
champagne.
video.
We'll
I'll
pop
look
a champagne, and I'll share my Celsius drinks with you. I'll send you one up there in New York.
super cool. I wouldn't have thought to look for that. So thank you. I mean, I wouldn't have thought to look for that. I mean, obviously, I would look for that, but I wouldn't have thought that someone would focus on it and come to that conclusion that
Oh,
you
they're
just.
having like this is the end of AMC if the goodwill's impaired. This company's done.
Okay, so yeah, the answer to that is that's not how you look at it. Make sure to look at free cash flow, and then maybe consider. Like if you look at free cash flow, the goodwill impairment goes back in as cash. So
The
that
funny
might be
thing is when GameStop wrote off all their goodwill, are they done?
no, of course
Did they
not.
die? Did they
Yeah.
die? Why would you say that about AMC? Did GameStop die when all the goodwill got wrote off? Like, what is the big fucking deal here?
Yeah.
All right,
Maybe,
moving on. Enough
no.
about
Okay, wait, I want to
about
share this
goodwill.
one thing just to make it like let's just show the cash flow statement so people can really, just
All
in
right.
case,
All right.
folks are listening to these other folks and feeling like, no, but that's got to be right. Here, I'm just going to take any. If you feel that it's right or wrong, or you just want something to look at so that you can understand it better, it's really the cash flow statement. Let me share this screen here. Actually, I don't think it would be inner quarter, so I might have the wrong one. Oops, wrong one. That's not the right screen.
While you're pulling that up, Anthony says, I understand it was a roll-up strategy, but can the SEC investigate AMC for monopolizing the movie theater industry? It's not the SEC that looks into monopolies, but that already happened. That already happened back then. So you don't have to worry about that now. Okay. Who is it, May, that looks at the if it's a monopoly or not?
FTC. Yeah, the
Federal
Trade
Commission. Yeah. So that happened, and the mergers were approved. The acquisitions were approved.
Yeah. Okay. So if you can, okay. So this is the cash flow statement, guys. And so if you've got right now, the cash flow statement is what I'm looking at. Obviously, Tony's looking at it. We're not the only ones. Most people are looking at the cash flow statement. And free cash flow is essentially cash flow from operations minus CapEx, right? Because it's essentially what money. So what is the point of operating? Sorry, did I get this right? Yeah. What is the point of operating cash flow, and how is it different from operating income or net income? It's basically the math is this. It always starts with cash flow from it always starts with earnings, which was a lot. This is 9 months, okay? So it's not the quarter, it's the 9 months.
I hate that they do that too, but whatever. I'm not an accountant.
Yeah, unfortunately everybody does it. So in fairness, they're actually doing it the way that everybody does
I
it.
I know.
Yeah, but I know it sucks. But this is basically the net loss year to date, which we know they came in with a W, not an L this last quarter. And then every single piece is what is non-cash. So most of this is adding back in stuff that was non-cash, meaning from an accounting perspective, you took a deduction off of income so that you didn't have to pay taxes against it. But from what did you actually experience in your pocketbook, it's all enumerated in this part of the cash flow statement. Additionally, you'll see things that are like not going to be in the net income statement because technically they are things you actually had to use cash for. And so that's, I mean, for those that are just starting with the basics of how to like learn to read these statements, because I do, in fairness, think it took me more than a couple years there, before I really understood it versus I was just mouthing the words like I understood it. But in here, you will see in the cash flow statement, in the cash flow from operating activities area, you will see that goodwill impairment if and when it comes up, and it will show as a positive to cash flow because it's basically got to offset the net income, which is at the top. So that's why I'm saying, why are they focused on this? Because that's a non-cash impairment. It means nothing to the ability of the company to pay back debt. So quick lesson in accounting. Sorry, I don't even know if that's
all right. So we'll cross that bridge if we come to it. I don't think it's going to happen, but if it does, we'll have this talk again, maybe a little more in depth, just a goodwill impairment, cash flow, balance sheet, income statement, how how it all interacts together. We'll have that talk in March if it happens. Darren says, if your stock goes from $10 to $5, that's a 50% loss. To get back to $10, it needs to go up 100%. Yep.
That's gross.
Tech we love. All right. I'm looking for more questions, guys. If I missed your question earlier, feel free now to re-ask them, please. I scrolled up and tried to catch as many as I can, but I probably missed some.
Real Estate Guru seems very upset with my statement, so I don't mind responding to that.
Go ahead, because I don't see it on my chat here.
Okay, he's on our main screen right now. Let me tell you something. You might feel strongly because you're in one area of real estate, but strangely enough, because covering AMC is that brutal, I've actually listened into the REITs that in fact have exposure to AMC, and that is exactly what they said too. So they, number one, did not necessarily want that space empty. And number two, absolutely deferred rent. And number three, are experiencing payback from all of the theaters, not just AMC, but also Cinemark. So as much as you may feel that I'm an idiot, again, I'm up on the bonds, number one. And number two, that's what the actual landlord said, my friends. So there you go. I double checked. It's not just what Adam Aaron said. It is actually what some of the landlords said. And thank you for those of you who asked me to look into those stocks, because I did.
Jean Michael says, do you have the numbers on the current interest rate paid on the current debt? Can you bring up the debt chart again, May?
Okay. What was the question again? I don't think.
What is the current rates on the current debt?
Oh, great question. Because this one is like, if you're still getting comfortable with this, you're asking absolutely the right question. So,
and these are in the 10Qs, guys. You can go down to the debt section of the 10Qs and find this info.
Yeah, they're really good about
the screenshot she has up there.
Yeah, they're really, really good about breaking it out. And you can see that the subordinated debt is all cheap. So, I'm happy to hold it for as long as I need. I'm happy to hold it to maturity, right? So you basically, if you're like, hey, you know what, I'm going to learn this, even if you don't invest in it, doesn't matter. But maybe some of the resources that Tony puts up on like what the QSIP is might just be fun for you from a learning perspective. Realize that this percentage is always going to be based on par value. So it's always going to be 6% of 100 or 1,000, since you have to buy them in thousands, but then you have to do a minimum of five bonds. So it's going to be $63.75 is what they pay per year on these notes, and so on and so forth.
That's the dividend you're receiving if you buy those bonds.
Yeah.
6% of $1,000, even if you bought it for less than $1,000.
Yeah. So for example, since I bought these bonds at 40, so I bought these, they paid $61.20, but which divided by 1,000 is 6.12%. But I bought those bonds at $43. So my dividend yield is almost 15%, a little bit over 15%.
So that's what we call your effective yield, is like 15%,
exactly.
right?
Yeah, exactly.
We're getting to some real finance nerdy shit now.
Yeah. So let's go back to that screen just in case people aren't seeing it really well. But you can find this, like Tony said, in the 10Qs, and then you can like have it for yourself.
So there's the debt that AMC is, the yield or the interest rate, if you want to use that word, that AMC is paying on this debt. But as an investor, you might get a greater effective yield if you're buying that debt at a discount.
Yeah. It's nice. It's a like when I got them at $43, a 15% rate sounded wonderful to me because I didn't feel they were going bankrupt. But the fact that I could get them at 43 at the time meant that other people thought they were going bankrupt.
Right. And
So
that's just like if you're buying the equity or you're buying the bonds, there's always that great debate between the two sides.
Yeah.
And only time will tell who's right, I mean.
Okay. What else do people have as questions?
Tech We Love says, does May know of any debt covenants that prevent AMC from any corporate actions that would be removed if paid off? I don't know, May, if you've read through all the debt covenants. I have read through them. It's been a while.
Yeah, there's a few for sure. You can't issue a dividend. I think most people know that until more than one of these is paid off, specifically the Odeons. You can't, you actually can't buy back stock either, by the way, until some of that stuff.
I see a lot of people even in the past couple of days saying, why doesn't AMC do a stock buyback? Even Highcroft also has a debt covenant preventing stock buybacks, by the way, which I don't know why they announced one. They announced a stock buyback, so they probably got a waiver from the debt holder.
Yeah.
And
Oh,
the
that's
other
true.
thing, the other thing that we should talk about is the minimum liquidity requirements of the company.
Oh, yeah, I
It,
forgot
it,
what that is, but you're right, there is something in
I
there. Go
think it's
ahead.
about 400 million. It might be 200. I don't remember. It's been a year since I read through all of the debt agreements, but
Yeah.
they're all out there if you guys want to dig through them.
Yeah, the requirements were actually I mean, they were kind of what you expect for a company when people are concerned it really has issues. So, but I don't remember all of them. I'll go ahead and admit I don't remember all of them. The stock and the stock the dividend ones I remember, and
And the reason they don't want to pay out a dividend, can you explain it more eloquently than I can? Because I probably have more scotch than you have wine. It basically it reduces, it's spending the cash, and it's harming
oh,
the debt holder, right? If they
well,
pay
okay.
out a dividend.
Yeah, I mean, even simpler than that, they're first in line. So the last thing they want the company to do is like, use all of the cash to give a dividend to the equity holders and bankrupt the company by virtue of doing that. And by
Right.
the way, it turns out there are a couple of SPACs that have actually done that before, which is part of the reason why I'm always sensitive to being interested in SPACs. SPACs will sometimes pay out a dividend. They don't care what happens to the actual assets underlying and what's owed there. So if the stuff wasn't written correctly, it wasn't written correctly, and these debt holders are no dummies, so there's no way they would have allowed it to be written incorrectly.
Another question that I remember commonly coming up before I was reading them back is, do you think Adam Aaron's going to do another reverse split?
I don't think it's a zero probability. I don't know the answer to that. I don't have a strong feeling one way or the other. That is actually a concern that I have, is that even if the stock and the financials are doing really well, the short sellers are nuts. The short sellers are nuts. And it is actually the case that when the stock trades this low, the volatility can be so crazy that weird things happen. And so
It is the biggest fear that I have. Not, I have two fears: dilution right now. Like I bought last week. I doubled my position in AMC last week because it was so damn cheap. But I did not. I was just nibbling, right, May?
I refuse to
Like
take a full position until I
right.
can see.
I'm not trying to spend all of my cash on AMC because it's at $5 because it could go lower. But I have these fears of
I
another.
don't want it to go lower. Let's all be clear. Neither one of us wanted to go lower. If I
Right.
don't get
I
my
don't
full
want it
position,
to
I
go
have to
lower.
move up. If I
But
have to be in
I
it,
have these nagging fears because I look at everything. Yes, I'm bullish, but I'm not like I I don't discount bad things can happen. And so I worry about more dilution, and I worry about a reverse split. Even though I think they're remote, there's still possibilities. Can you is it correct that on the NYSE, once you go under $5, you
no,
are
it's fine.
essentially considered a penny stock?
I used to think that that was true because the number they used to throw around was 8. But subsequently, I realized that there is a very specific line item in the documentation that says that it really does have to be a dollar. But I have absolute back when I first started penny stocks, if you were under $8, you were a penny stock. And I remember people saying that all the time, because I remember that used to be like if I was going to pitch to certain people, they were like, if it's under 8, May, you're really, are you pitching me a penny stock? What's wrong with you? Do you know what I
Yeah,
mean?
that is my concern.
Like,
Like if it
that
goes
shouldn't.
under $5, I read recently, May, that under $5, institutions may have some trepidation about buying the stock, or might not even be able to buy it.
Yeah. I mean, there's definitely, because the thing is that actually, that's why 8 or 10 or anything like that, the volatility is so great because if you think about it, I mean, it's a huge percentage. When the stock moves 10 cents, right? Like 10 cents could be the bid ask for some, the spread between bid ask for a bunch of stocks that aren't even over $100. 10 cents, it's nothing. But 10 cents on $8, 10 cents on $5 is actually a big one-day move. And figuring out, you can't hedge that. There's nothing there. I mean, like you could hedge it in the options market, but it's very expensive to hedge it. It's cost even more than 10% to hedge it. You know what I mean? So like that's why with big firms, if they're going to take a huge position, and because the swings, are gigantic. It's so gigantic. Almost nothing else in diversification can make up for it.
Someone asked, why is Cinemark's rent, or why is AMC's rent double Cinemark's?
I don't know the answer to that. I have to see like exactly what
I'm pulling up the income statement here to see if I can pull up their rent, because I feel
what
like
is
this
it by
is
that?
a
Is it
I
just
feel like
total?
this is a bearish talking point that
Is
probably
this
is not
just like
really
total
looking
number
at
of theaters?
the
Or is he
macro situation.
well, no, I mean, I don't know what the question means. Does he mean like the total rent expense? Because there
Right.
actually
That
are more AMC
Yeah,
theaters than
let me tell you in a second, because if you're
okay.
just looking at AMC's rent expense on the income statement versus Cinemark's, well, of course it's going to be double because AMC's twice the size of Cinemark.
Yeah. Or I mean, or did you divide it by the number of theaters? Like I'd be curious.
Yeah, maybe whoever asked that question can give a little more detail while I'm pulling up the 10Q
Yeah. I
of
mean, I would say
Cinemark.
this. I would say that one of the biggest differences that could account for that is that most of AMC's international properties are in Europe. And well, actually not most, almost all. I mean, unless you want to
Cinemarks are all in Latin America.
yeah, and so your rental expense, if that's what the issue is, then that will absolutely create the difference. But I don't know the answer to that off the top of my head. That's what I would
Cinemark has facility lease expense of 84 million in the last quarter, and AMC, hang on. Let's just see if this is double, and we can answer this question real quick and easily, I think.
yeah, I mean, all these questions are good questions.
AMC's 224 million.
Okay,
So
so
yeah,
then
AMC is more than double, but AMC has double the theaters
yeah, and then also you
than
probably have a
Cinemark
little bit of FX
in
Europe and
Europe versus Latin America.
yeah.
That's a very easy question to answer, and I saw that one popping up a lot on social media this weekend.
It's
May
a yeah. Oh, really?
AMC's rent is twice that of Cinemark. Well, duh, they're twice the size, dumbass. Not dumbass that asked the question. I know the guy that asking the question is probably reading all the fucking bear posts of people that have never bothered to understand any financial statement in their life.
You know, it's really nice because I do like, and I noticed that too. Like, if someone's asking a question that's clearly like somebody said this to me, what's your thoughts? I'll always like my first reaction is no when I early days when I was just getting used to the trolls, my first reaction would be like, why are these people so mean? But now I'm like, oh, they probably have like a real question because something I'm not seeing
Yeah, I'm
because
sure the person asking the question is not
yeah,
trolling us. Like they
yeah,
genuinely read this,
have that question.
and it's a great question to talk about because we can swat that one down really easily.
Yeah,
The company's twice the size, so the rent is going to be twice as much.
yeah. It's a decent question. I'm cool.
Tech We Love says, wasn't Highcroft under $1 for a year? Yeah, but they're on NASDAQ, so different than
Yeah.
NYSE.
It's a good question though, too.
Let's see what else we got. Adam Aaron said Taylor Swift made 261 million globally. Yeah, 179 in Q4 domestic box office. They did
Yep.
issue a press release tonight.
Ooh.
I was just reading that before we came
So,
on
we need to know
live,
what the
May.
margins are on that. I'm
And
actually also curious how much concessions were sold. Like how many Taylor Swift shirts and what was the AMC cut?
yeah, I didn't factor in a whole lot of extra oomph for that in my earnings because I like to be conservative, and
Yeah.
I'd rather be low and wrong than high and wrong.
Yeah, no, that's good. I think that's why I really think these analysts that came out with these estimates, unless they have a very clear statement associated with the concert business, my suspicion is at some point they will need to back down.
Bitwise says regarding rent, they're saying per theater average. I'll have to look at that tomorrow, but just looking at the 10Qs, looking
Yeah.
at Cinemark's rent expense versus AMC's, and knowing that AMC has 2x the theaters, that doesn't make sense to me.
Yeah, it kind of looks like if you just divide by, it might be a little bit higher, but then that's easily accounted for Latin America versus.
In fact, May, I have here, if I can pull it up, the exact theater comparison
Oh, cool.
of Cinemark to AMC. Let me share my screen because I track this shit. Yeah, that's the right screen. So
Yeah.
this is AMC versus Cinemark locations. AMC has 906.
Mhm.
Cinemark has 514.
Oh yeah,
So
then
even if the rent was on par, which you would expect, right, May? Because
yeah.
landlords don't operate in a vacuum. Your lease rates per city, or other than comparing Europe to Latin America, you're pretty much going to get the same price per square footage on
In the
a
US, yeah.
lease.
And then anything that's left over is definitely that, because you know
And of
it's definitely the cost of rent in Denmark versus the cost of rent in Colombia. Okay,
yeah,
like
of those theaters, 906, AMC has 337 internationally, which is Europe, Denmark, Finland, Germany, Ireland, yada yada yada, right here. And
yeah, Spain
Cinemark's
is
has
cheap, but the rest of us
199 in these
are not.
markets, all in Latin America. Very
Yeah,
inexpensive countries.
yeah.
So I think this is just a bullish. May, you want to know how crazy these people are? These bears that are pushing this 2x rent thing. They're actually putting out videos and tweets now saying that the company is money laundering through fake rent. Like, you
Oh,
can't make this shit up.
God. Why would you say that? What,
By the way, the same guy
really
that
nothing else for them to
made a
do?
video that said AMC is money laundering also tweeted out yesterday that gravity is a scam and it's not real. There's no such thing as gravity.
What does he think is
So
keeping us stuck to the earth?
he's a flat earther, in other words. So
I don't
guys,
know, even if the earth is
you
flat, even
got
if the earth
to
is
take
flat.
into account who you're listening to. Like, literally, a lot of these AMC haters are flat earthers on top of it. So
I
if
don't
you
think
that's
that.
how what you want to believe, that's fine. But don't come to my channel and ask me that, because I'm gonna rug pull those SOBs.
But I would like to know the full argument, because even if the earth is flat, what sticks us to
Let's
it?
not go there, May. We'll be there all on the flat earth shit.
I feel like I'm gonna
They
get
have
these
an answer
tags on
for everything, May.
It's gonna be
They
like,
have an answer for everything. I had a friend that I interacted with for a year as a flat earther, and everything I threw at him, it, it's like try and disprove a negative.
gotcha, gotcha. Okay.
What I would say to the gentleman or anyone that wants to talk about rent, send me your due diligence, send me your numbers, DM me. I'll be happy to look at them, unbiased, unemotional. And if you are correct, then I will make a video saying this is fucked up. AMC's paying 2x the square footage price for rent. But if I can tear apart your argument based on the fact that the company's just 2x the size, and seems pretty logical that that's the answer. So send me a
Sorry.
DM with your DD if
Interesting.
you got it.
Can you please explain to me why talking heads who cover the financial industry on television are panicking and saying that AMC has no choice to foreclose on land? Okay, I would love to know which talking head you're talking about. I listen to the actual landlords of AMC.
Gasparino.
Okay, I wonder, here's what I have to ask. Then I would ask them a very simple question. Have they listened to the REIT owners of the properties where AMC has theaters? Because the REIT owners don't seem to be concerned. Right? EPR or something, was one of the REITs. They had a bunch of exposure to Regal, but they also have exposure to AMC. It's only 1% of their or some single digit percent of their portfolio. They were like, yeah, we're getting rent now, so we're good. And then, and then there's several other mall REITs that also have AMC exposure, and they're making enough off of the restaurant reopening plus some of the retail being okay. So I'm not seeing it. If they could identify which specific real estate investment trust, which REIT owns a property where they believe that they're going to foreclose on AMC, and it has to be more than one theater, by the way. Okay, it can't be one of 900. That's like crazy. Then we can have a conversation. That would be my response.
Wired Ape says, can we look at book value per share and comment again? So I'm highlighting a few things on the screen here, May. Shareholders equity, which is total assets minus total liabilities, negative 2.1 billion. And then you divide that by the number of shares outstanding, you get your book value per share of negative $13. Am I incorrect?
No, you got
Per
it right.
share.
the issue. That is exactly the problem. That's why like I came at that hedge fund guy so aggressively. I know no one will ever give me credit for it, but he was all, whatever. And I was like, well, then you explain to me, since you do have, because I think I didn't realize you're a hedge fund guy. And I was like, it sounds to me like you haven't had a chance to really review the financial documents, because I assumed he was like just like any other person that didn't know how to read financial statements. He's like, I don't know how to read financial statements. That's laughable. Ha ha ha. Who do you think you are? Sort of thing. And I was like, okay, I just reviewed your background. So you do in fact have the background to read financial statement and understand the debt and the debt covenants. Can you explain to me why you think someone who's on the second lien would feel that they should push a company into bankruptcy or somehow win if this company went bankrupt, given that this is how you work out debt? No response whatsoever. Crickets chirping the entire time.
So Wired wants us to tell him that the book value per share is about to flip positive. And the trend is definitely improving, my friend, right? If we pull up the chart,
it will take time for book value per share. In order for book value to per share, because if you think about it, it's just total assets minus total liabilities.
right? I can't get the chart to work, but
Yeah.
like May's saying, your total assets need to be higher than your total liabilities, and we're just not there yet. Even if AMC has $1 billion in cash now because of the cash raise, that's only 350 more million than what they have now. And we haven't reduced enough debt to flip positive in the next quarter or two. I don't see it.
And again, other people may be looking at net income. I'm not interested in net income until this company is cash flow positive, because looking at net income when a company is doing this specific set of activities is going to give you a number that is not helpful. It doesn't give you anything, right? Because between operating income and net income, and even within operating income, is a bunch of charges that are related to the turnaround. And you can't, like, some of them are like, some of those charges are timed on the quarter, and some of those charges are amortized over a period of time, and some of those charges never show up in the income statement but are depreciated or removed from the asset value of something else. None of that is helpful when a company's in turnaround. You have to actually look at the cash flow statement, free cash flow. So really, I mean, I'm not going to say it's bad. Am I thrilled that they were positive? Yeah, because the first line, and I'm not going to say that net income has nothing to do with cash flow, because it's the first line item in cash flow is net income. It starts with net income. But cash flow from operations is all about adding back in and subtracting this stuff that is what the company's actually earning. So it's, even though net income is important and relevant, we care, we do a little bit. Right this minute, cash flow is what we care about. Right this minute, we care about free cash flow. And the reason we care about free cash flow is because you cannot, like, earnings is very secondary to paying down that debt right now. Hopefully that makes sense. I know that sounds crazy, and there's probably like, it takes a while. So I appreciate if not everybody is like, why is she using this jargon? Just let me know.
Volkstoy King has a question, and I'm just going to guess that he's probably a GameStop holder because of the way the question's worded. And I want to address your question in the most fair way that I can. He says, are people still in AMC? Thought this was old news after the reverse split. Figured everyone would cut their losses and make it back in other areas. So yes, unfortunately, some people held all the way through the reverse split. And my intention of being here is, there's a lot of bad DD. There's a lot of hopium. There's a lot of trolling. There's a lot of misinformation. There's a lot of videos and tweets being made without people looking at the financial statements. And I don't want to abandon those people that are significantly down on the money. I want to be at least if there's a chance of the ability to trade it on volatility, or a chance in a year or two of the company recovering, I want to be here once a quarter or so to provide that information in the most unbiased way possible. There's people so far down that there's no point in them selling. That's how they say it on social media. So yeah, there's people still in it. There's other people like me that sold before the reverse split, waited for it to drop, and then rebought in. My cost basis when I bought back in I don't remember if it was late August or early September, I bought back in around 7.6, whatever it was, around the lows, and I made 60% run up and sold around 11.20 on that run up, and waited for it to drop, and I bought back in again. I mean, there's perfect opportunities if you understand a company, understand the finances and the stock and the volatility and how it trades, to make money in any play, unless
Yeah.
you just think it's going bankrupt, which I do not.
I don't think it's going bankrupt either.
So there's a lot of different ways that people are looking at this stock. Some are stuck. Some, like May, are bond traders. Some, like me,
I'm a bond trader. I'm only in the bonds because the bonds made 100% sense.
I'm not negging you because you're a bond trader, May.
I mean, I did options and bonds after the deal because I thought that was the right way to play it.
Yeah, but I mean, I don't think there's any point in negging people that
And now I
are
have
still
stock,
interested
okay?
in AMC. It could be a very viable recovery play. That the only way you know that is to listen to people that are talking the financials and have a good head on their shoulders, that aren't pumping you full of hopium, right? The worst thing you can have is bad information.
I agree. Now, I would mention Real Estate Guru. I feel like for some reason you're having difficulty between net income and free cash flow. If it's helpful, real estate is actually the other industry that would never use net income. They would use funds from operations. And they would use funds from operations because if you use net income and you're a big, huge real estate guy, then what happens is every time you go and buy and sell a property, you have these crazy swings on net income because you may or may not be taking taxes on a property. You might have to do a bunch of weird stuff as relates to depreciation of the property, et cetera. And depreciation is all non-cash. So if you have like one property and then you take a huge depreciation on it, for whatever reason that you're allowed to, quite frankly, your net income will look like hell, but your funds from operation will look like what you're actually making as far as money goes. So that's free cash flow right now. Like funds from operation is a little bit different from free cash flow, but not by much, quite frankly, because free funds from operation is also trying to take in consideration maintenance capex. So if it's helpful to think about it that way, super thumbs up. But that's why not for companies that are undergoing this much transition, not net income, free cash flow.
May, I said to one of my friends, going back to Volkstoy, just to finish off this conversation, I said to one of my friends in the Discord last week that I think I will make more money on AMC in 2024 than probably any other ticker. Not because I think AMC is going to squeeze, because I understand it so well. Does that make sense? If you understand the finances, if you have a non-emotional, non-conspiracy understanding of what's going on with the stock,
I feel really positive about AMC. I think
you nibble like you do, you nibble.
Yeah.
If you're not just trying to go hog wild because it dropped to $7, I'm going all in. No, I'm very cautious on how I trade this stock.
Yeah.
It's volatile.
It's only because I think I have other stocks that are just as good. Damn it. They're all my babies. Do you know what I'm saying?
It is also not the only stock in my portfolio, right? I'm mostly looking for blue chip stocks that are undervalued. But guys, there's a lot of people stuck in this play. I'm not just going to abandon them. And most of the advice that's being given out, especially on YouTube, is total crap. So I'm not going to abandon people. I'm going to cut back the quantity of videos I do on AMC because I get attacked so much. And if people don't want to hear good information, then fine, I'll just stop making it. But at least once a quarter, I'll cover AMC.
I mean, I'll cover once a quarter until I don't own anything with anything on AMC, mostly because it's kind of fun to cover it. I'm not going to lie.
Yeah.
Even with the trolls the trolls, you guys are a little bit mean, but now that I've got most of you blocked that are truly pernicious, it's usually like the rest of you just ask questions that I'm totally happy to answer. You might ask them a little aggressively and kind of mean every now and then. I wish you didn't ask it like that, but I can still within somewhere in there see like a question. So as long as as long as I actually still have a position, I'll cover it. And then if like, but that's true of more stocks than just AMC for me too. And that's for you too. You don't just cover AMC.
No. Even though I get accused of that a lot, May. Tony's the AMC guy. He only covers AMC. Like, tell me you've never listened to my channel for 2 years if you think this is the only stock I cover.
You really haven't subscribed. Subscribe to both of us, guys. No, I'm just kidding. Actually, I'm not.
By the way, after the reverse split or after the split on GameStop, I sold on that run up on the split they had a year ago or whatever. and I've been trading GameStop for the last year or so and making money on that too.
Oh,
So
good for you. Yeah.
yeah,
Fif-
it's just when you follow stocks and you know the trends of how the stock moves and you understand the financials, it's very easy to trade it, and almost buying and holding it becomes an anchor. Like you're stopping yourself from making money with this buy and hold mentality,
Yeah.
and
Sure. I
that
know
really
it sucks, but
it makes me angry, the people that push that.
yeah.
But I can't save everybody, May.
Wait, so we had one question from, oh, it's moving too fast. It was just you wanted to go through the second lien debt again. Um, is it a
It
credit
says,
line?
can you explain 1.9 billion second lien debt again? Is it a credit line? Can you pull up that chart one more time, May?
It's
The
not.
debt
It's just
chart.
a bond. It's just a bond. So they have it. They took the cash in, and they just have to pay it back. So it's more like a
They have two portions of 2026 debt,
yeah.
right?
They're just talking about
One one is a bond and one is a credit facility.
this one. So the first lien is a credit facility. That's more like you can think of it like a credit line. The second lien debt, you really can't think of that as a credit line. That really is bondholders raised capital. That capital went to AMC. AMC has to pay back 12% probably at this point on that debt. And that is what it is. Hopefully that answers the question. If not, maybe you can get it in before we close it up here because we've already been going for 2 hours and change. Are there still more questions? Are we missing any questions here?
We're wrapping up the questions. Dustin says, Tony, if you know it's an attack, is it really an attack? Don't let it
On the stock, you mean, or on us?
don't know if you
Like,
correct, but if you listen to these nut jobs that want to violently attack people that disagree with their position, I have a kid. They've doxed my kid and where he goes to college.
oh, that's
Uh,
terrible. You're
yeah,
vicious.
I mean, I got to worry about my wife and my kids. I have two boys, and these nut jobs are advocating violence against anyone who doesn't say what they want to say. And what they want us to say, that Adam Aaron is a criminal. Adam Aaron is a criminal that wants to bankrupt the company, and he's purposely screwing us all. And I'm sorry, I look at the financials and I don't believe that. But I'm not going to stop covering AMC. I'm just going to be very selective about what I say and the
Yeah.
quantity that I cover it, because I don't need fucking nut jobs
You got
doing
kids.
that,
You
doing
guys
that stuff.
got
Like
people's kids. That's
I
messed up.
live in Texas. It'd be a really bad idea to come after me because we have
We got a
very
lot of
liberal
guns in
gun
my family
laws.
too, by the way. I'm not gonna lie.
We have
Florida's
very liberal gun laws, and I have a couple right behind me right here. But I still got to worry about my wife and my kid.
I grew up in the
And
country. Okay.
it only takes one lunatic, and they're out there every day having 5-hour space calls, spinning each other up with conspiracy theories and nonsense and lies, basically.
Like I want the stock to do well just so that everyone feels
I,
better and calms down. But
yeah,
yeah.
I mean, it is what it is, right? The balance sheet is what it is. The box office is what it is. The company's doing what they need to do to avoid bankruptcy, and it might not work out well in the short term for shareholders. It is
Yeah.
what it is,
I
but
will
they're
say
trying to avoid bankruptcy. So you need to understand that and make your trading strategy mirror what's actual. It's like I started saying a year ago, and I said, they said I should be kicked out of the reservation for telling you guys to evolve your thinking. We should shun someone like Tony for telling us to evolve. No, you shouldn't shun me. You should learn to be more open-minded and look at the financials, because
we
that's how you make smart trading strategies.
got a question from Tech We Love. Can the bonds trade above 100? Do the bonds go up with buy order demand or what? Or is it opposite direction of options? Okay, it's a little bit different than that, but bonds trade up. So they're actually two separate questions. Can the bonds trade over 100 is one question, and the second question is what makes the bonds trade up or down? What makes the bonds trade up or down is default risk. So when that went away, the biggest chunk like it just basically has been fairly steady and even, but that's all happening because the prospects of AMC going bankrupt have declined dramatically. And also, so either this quarter comes out great, you could get a credit rating upgrade. You could get, if the debt gets moved back, it actually also might instigate a credit rating upgrade. And let me tell you why. The reason it might still result in a credit rating upgrade is that some of those bonds are triple C negative. So you could just go to triple C neutral or triple C positive and still be in theory junk, but it would actually be a meaningful upgrade to the bond. So there's that. The second thing, can the bonds trade over 100? The answer is yes, but you'd need interest rates to decline dramatically because
Yeah, I was going to say, can you explain that, like in terms of treasuries, like, because I think that's an easier example.
Yeah, that's probably easier. So like bonds, whatever the rate is, you'll oftentimes see treasury bonds trade well over 100 because the rates have decreased. And so it's in order for bond, this older bond that yields 5% to be marked the same as this newer bond that yields 2%, then that bond has to be 103 essentially. I'm just keeping it really simple. If it's like all things being
Even
equal,
if it's simple, I can guarantee you this is a difficult conversation for people.
This is a hard concept, but it's true.
For me, even for me, I understand how bonds work, but like the whole semantics of how does something trade higher
than 100? Yeah.
Unless you're a regular bond trader, it can be very confusing.
Yeah. So in the terms, in terms, let's say the rate is 5% on the first bond. Okay. And that at this new time, like time moves forward, and then we enter a period where they're going to make rates 2%. All of a sudden, right?
But that bond is always going to pay 5%.
That bond's always going to pay 5%. But
that's the important thing to understand. But the rates drop to 2%.
So
okay, carry on.
People are going to bid up that bond from 100 to 103 in the final year because the 1 year version of that bond, same person paying it, which is the US government, right? In 1 year just remaining, that bond is only going to give you 2%, but this bond's going to give you 5% if it were still at 100. So I'd be happy to pay 101. I'd be happy to pay 102. I'd be happy to pay 103. So that's what would happen in order for it to trade over 100. Now, if AMC, it's very low probability that the AMC bonds trade over 100 at all.
Almost minuscule.
Almost nothing. Like, because you'd have to, the only possible way, like if I was to imagine a world where they trade over 100, it could only possibly be because someone bought them and they knew for a fact, which is weird because it wouldn't be known for a fact, that they were going to be held, the merger would be held up for exactly and precisely 1 year. But at that time, the debt would all be paid back. And then it would only be the 12%, but they wouldn't, for whatever reason, pay back that debt before that. Then, yeah, you could see the 12% trading down to whatever is the acquirer's interest rate. So if the acquirer was like Amazon, I'm not saying that it's getting, okay, let's just be very clear. But let's say the acquirer was Berkshire Hathaway, right? Well, Berkshire's
Elon Musk. They want Elon to buy AMC.
Or whoever it is, right? Someone who really doesn't, like if that someone whose interest rate is truly zero, okay, or something like that, then yeah, those bonds would trade up. You know what I'm saying? And they will trade up either and they should trade up just to 100, but in a pinch, because they're still yielding 12% and there might be a delay such that they have to pay that 12%. You might see them trade over 100. So that would be the only possible scenario that I could see AMC getting that lucky. Hopefully that fully answers the question.
May, I got one other one. This whole conversation remind me of another question. There are people asking, and I'm just putting this comment up here because I agree with it, but there are people asking, and I don't think you and I have talked about this, but I get this question a lot. Why doesn't AMC offer a 5% bond for retail traders to buy so that they could raise $3 billion and pay off all the debt? That way, retail could benefit and make 5%, and AMC could be debt-free with all their 2026 debt. I've answered this on Twitter. I want to hear your reaction to that question.
Why can't they do a dividend or payback?
Why can't they issue a 5% coupon bond to retail to raise $3 billion and pay off the 12% debt?
It's too big a number. They're not going to get that from retail. That's a
Well,
huge
okay.
asset raise.
Say that again slowly and louder.
Well, there's two pieces. Number one, it's a huge asset raise. 3 billion is for retail. I mean, you think about the number of companies that go public at three. The market cap of this stock is under 2 billion right now, right? So you can't then come like it is there. First of all, I mean, just think about the number of people that have been here tonight that actually don't know if their broker not just don't know feel fairly certain that their broker can't sell them bonds. So retail, to get $3 billion of retail demand for a bond is not going to be easy. And then depending on how they structure that debt, it may be the case that many people in retail cannot buy them because they're not qualified to buy them, depending on what precisely they ended up doing for the structure of that debt.
Yeah. So most of the jacknuts that are throwing this idea out there are also the flat earthers, May. Like, surely, May, they say, there's 3 million investors and we're all willing to chip in $1,000 each and we'll just pay off that damn debt and we'll earn 5%. So easy.
If you want to do that, then buy AMC gift cards. I mean, they're depending on how they have the things set up. After a certain amount of time, the capital just goes to them anyways, and it would be a 0% interest rate. So if you feel passionately that you want to help the company out, just buy gift cards and don't use them for a year.
I think the people throwing this idea out have zero idea how the bond issuance process works, and they're vastly overestimating the willingness or the ability of retail traders to buy up a bond issuance of $3 billion. And I had another and. I think that the company would be eviscerated for issuing a 5% coupon to retail traders when probably the going rate should be 12, 13, 14%.
And that's a good point,
they'd be crucified for taking advantage of uneducated investors. And that goes to that point that you just said, like, could you even buy it? Are you qualified? Can you expand on that?
I mean, some of them have really funky things where it really is a proper private placement and you'd have to fit certain income or whatever requirements. I'm not 100% sure how you would do it. Like, because what is being asked to be done is abnormal. Typically, if you were going to do a bond, there might be some really fancy banker that says, I think we could get it done, so let's offer this rate. And if you didn't fill the entire demand,
then the bank has to buy it, right? If you don't fill it, the bank has to buy it.
Two things can happen. Either the bank can buy some of it, or alternatively, and possibly, depending on how it's done, they would just negotiate a worse rate. So the bank, if the bank is like, oh, you know what, we will be like the anchor. So yeah, we'll take down, you need 3 billion. We'll take down 1, something crazy like that, right? Just find the other 2 billion from someone else. But this is the rate that we'll do it at.
Let me just say, the people that are pushing this idea are the no voters, the flat earthers. They have no fucking clue what they're talking about.
I can't be negative. It's just after New Year's.
I'm just going to say it plainly, May. They have no fucking clue. They can't even get 400 signatures. They can't even get 450 signatures on a share count, but they think they can raise $3 billion from retail traders on a bond issuance. Come on. Let's live in reality.
I'm trying to be gentle for the new year. You know what I mean?
Well, it's late and I've had a couple scotch, May. So real talk now.
Okay. We probably should end this sooner than later, though. Tomorrow I've got
May's like, Tony, cut it off. Let's see what there's probably some other questions. What else y'all got? One or two more questions.
Yeah, 1 or 2 more. It's getting late for me. I'm on the East Coast, remember? I think that's probably it.
Oh yeah, Nostalgia Network. That was another thing that I said in one of my comments. He said retail can't even muster up to vote, right? Look how few people show up to vote. Like, how do you think 3 million people are going to write a $1,000 check? We can't even get 25% of people to show up to vote. Like, there's just a disconnect in reality between what you think the quantity of people involved are versus the actual quantity of people really involved are and have the capital to do that. I'm not trying to be negative. It's just like, I'm a realist.
I would say that if you, it would be cool if more people would vote their shares and be
Absolutely.
active in the ways that are already available to be active, no matter what, regardless of the debt side. I do think that this last vote really demonstrated that it's kind of sad on that front. So if you're a shareholder, and in fairness, there are reasons why I think that happened that have to do with, like, if you're overseas investor, some of the overseas brokerages do make it really hard for you to participate, and some people are not used to getting their proxy statements or knowing what to do. So some of this is just shareholder education. Some people just didn't feel like it, and that is what it is too. But if that could be promoted more, that would be cool. I agree with that.
Anya wants to talk about SoFi. Anya, we're not going to talk about SoFi tonight, but message
I'll have to
May
do
on.
yeah, I will do a separate thing on
Yeah,
SoFi.
May I like
so
SoFi too.
crazy.
Maybe we can do a SoFi
SoFi
video
video.
later this week. Maybe.
Yeah,
Would
totally.
you?
Yeah, because I'm super lazy. I need actually someone to
All right.
kind of motivate
Let's.
me.
I'm going to connect with you, and we're going to talk about SoFi later this week.
Okay, cool. I'm
Tech
scared
We
of
Love
SoFi,
says,
but I
do we
love
know
it.
how long it takes for gift cards to expire and go on as positive revenue? I don't know the answer off the top of my head,
Yeah.
how long it takes for them to expire,
Maybe in the back of
but
your
I
car.
do know that they go on the balance sheet as a deferred income. And so
Deferred
remember our
revenue.
friend Al from Boston. He was
Uh,
like, Adam Aaron's trying to he had some conspiracy theory. He was hiding income and deferred income, yada, yada, yada. Anyways, deferred income
Deferred revenue.
on the balance sheet is
So
basically cards and a couple of other things, the
yeah.
A-list memberships.
Yep.
And
Subscription.
when you
Deferred
buy a
revenue.
gift card, it goes as deferred income. And when
Revenue.
you use the gift card, it's removed from that liability account and it hits then as income on the income statement. So
Yeah.
if you buy a gift card, use it. That's my advice.
Don't
What's your
use it. Just let it sit there.
huh?
It depends, because there are some rules around it. There are a couple of rules around it. But you can, like, remember, there's, for every debt has a time component. So if you've got, and I think it depends if they have an administrator of the gift card. So I think after a certain, so if you look at the back of the card, it'll tell you if there's an expiration date on all gift cards. And I don't
A
know
lot of
that
times they're 12 months, right?
a lot of times there's 12 months, or alternatively, if they have an administrator, there's like, and they've been doing gift cards for a while, there's a non-collect percentage of some sort, or there's a delayed percent. Like, they do these calculations that are, if you're a math nerd, it's really like, oh, okay, I can see how you'd put that together. If you're not a math nerd, then just realize that the variables would be, there's a percentage of people that still have a remaining balance on that card and never use it. There's a percentage of people that just forget they have the card altogether. And then there's people that just flat out lose the card but don't bother to try to collect it. And those numbers represent, there's like some math nerd on the other side that's calculating what the time horizon is associated with that and what the percent is, such that they do release funds. Like, it doesn't go into deferred revenue forever. So you can then access it after that. That's why, if that number gets longer on account of the fact that everybody that's trying to be helpful buys gift cards and then slowly uses them over the course of years, you could do it that way. Now, realize too that there are a bunch of states, not all 50, right? But I think it's like 19. Someone told me at one point, don't quote me on that, just Google search it and find it out. But there are some states where even if it's been 10 years, you can go back and be like, you owe me 20 cents off this card. And then if you go to the register of that place, they have to hand you 20 cents, but it's not every state. So it kind of depends, but no matter what, you're fronting them the money. And so they have that money to do things with.
They get to
Not
book
all-
the cash, but they still have a liability account on the balance sheet.
That's exactly right. So it'll
And
look like,
I think there's a big misunderstanding. Like, people buy gift cards because we're going to help the income of the company. It's not income
you help
until
the
it's
cash flow.
used.
You help the cash flow of the company,
Yeah,
which is
you help
all
the
about
cash flow, but encourage your folks that you're giving those gift cards to use them, I would say.
I mean, either way, if they're like if they're going to lose them, That's awesome, Dust, as well. Give the gift card to the most ditzy person you know who's potentially going to lose it.
But May, aren't there some laws, and maybe it varies by state, but
Here's my
if a
state.
gift card's not used, you at some point I think you can't count it. You can't count it on the income
No, but you get
statement.
to keep the cash. They'll
Okay,
give
well,
you
yeah,
back.
you get to keep the
Yeah.
cash.
Yeah. So it's really about keeping the cash is what it is.
I
So
forget all the rules, but I used to issue
Yeah.
gift cards through one of my businesses. I'm not an accountant. I had someone that took care of that, but yeah, there's some weird things about them. But basically, just if you hand them out, make sure to tell people to use it.
Tell them to use it towards the
You
end
don't
of
want
the
to waste your money. I mean,
towards the end of the year. Use it towards the end of the year so that we have 9 full months. No, I'm just kidding. I'm just kidding. But gift cards are
Volksboy says the reverse split was not necessary or needed. All right. May, any reaction?
I don't have strong feelings about it other than it's, if it is the case, if they're in danger of getting delisted, then they need to do a reverse split. Like they shouldn't allow themselves to get delisted. That's the first thing. And then the second thing is, I mean, really, let's just get the financials up. This other stuff is like mechanical. It's not really it's neither here
I
nor
look
there.
at it like this, May. They needed access to shares.
Yeah. Oh, wait, are you talking about the 8? Oh, okay. Yeah, sorry, my bad.
Yeah, I mean, they needed access to shares.
Yeah, that's true.
Stockholders were not likely to approve an increase in the shares.
Oh, okay. I'm sorry. I misunderstood the nature
The
of
only
the
way for AMC to raise
that was the right
capital
call.
was to
'Cause
do a
otherwise
reverse split.
Yeah, no, that was the right call because, I mean, in fairness, it isn't like when if I'm talking to my nerdy finance friends who like hardcore finance or even are, pretty seasoned folks at a company, let's call it, on the financial side, when I tell the AMC story, they are always the thing that they think is interesting and weird is the fact that there was a cap on the number of shares that you were allowed to issue to raise capital. That's actually what they think is crazy. That should not exist at any company. And I was yeah,
there's always a cap at any company.
There is, but it's never so close. Because if you think about it, GameStop didn't have a cap anywhere near where it needed to raise capital. So it was fine. I mean, I don't know the GameStop story nearly as well as the AMC story, so correct me if I'm wrong, but they were able to raise everything they needed.
I don't know their authorized share number off the top of my head.
But it isn't common. Like I definitely can think of 3 people who have crazy backgrounds. And when I told them that's the point they stopped on, which was like, wait, he had a cap on how much he could raise? Like that's the point that they stopped on, was that.
Volkswagen says most.
I will say it's weird to be.
This guy seems. I know you've been around for a long time, Volks. So I'm not picking on you by reading your comments. So don't take it that way. But he says most investors lost 90% of share equity. Why would you suggest buying gift cards that could expire? May.
All right. You know what? That's a good point. I'm just saying for those people who are like, can we do a debt offering to help the company? Can we do the thing?
Yeah, I know you've said that before. I've seen you tweet at May. I think if you're going to hand out gift cards to your friends and family, tell them to use it.
Okay.
But May, do you know there's even people that say AMC should just do a GoFundMe so people could straight out donate money with no economic benefit?
Here's the thing. At least you get the benefit of not being the person that didn't give someone a present, right? So like, I mean, you think about all the worthless presents that you get every year, right? And we okay, the thought counts. I feel the love of the thought. But are we going to pretend like there's not at least one present that you got this year where you're like, oh, I would have rather just had a coffee or something. You know what I mean? So that's all I'm saying. But yes, definitely, if you have a gift card, you should use it because actually what's been done is really beneficial to the company. And so you should take advantage of the gift card and use it right away. Like I definitely bought a gift. I'll tell you what I bought. One of the things I bought myself because it was just crazy. Target, for whatever reason, had a 10% discount on its gift cards. So like I spend money at Target. I mean, because, I'm more Target. I'm bougie. What you want? Like I also spend money at Walmart too. So just FYI,
May, this is one I'm going to tee up for you because I know you got the right answer. Volkswagen says stock ran 30% on the first denial by Judge Zern of the reverse split. Not a coincidence. This is a common talking point. May, do you just want to address this? Let's put this to bed.
I mean,
remember the whole AMC lawsuit, yada yada yada, shorts.
I've never claimed to understand how AMC trades as far as it goes. For whatever reason, that's how it traded. That does not mean that it was good for the company in any way, shape, or form.
It was trading oddly during the lawsuit because people were making bets based on the outcome of the lawsuit.
Yeah, that's right. Oh, yeah, right? Because of the ARB, right?
There was not going to be any short squeeze dependent on the outcome of the lawsuit. There was going to be people that had bets that had to adjust their bets based on the news, but it wasn't like it was going to run to $100 or $1,000.
Oh, you know what it was? It was because the ARB between APE and AMC.
Yes, it was because of the arbitrage. Right. This is so fucking simple.
Yeah, it had
people are like, that's proof. Look, Judge Zern said she might not approve the lawsuit, and the price went up. That was just adjustment of the arbitrage, guys.
Yeah, that's just the arbitrage.
Like use your finance brain, not your conspiracy brain. Any of us that do finance, totally understandable what happened there with the arbitrage. The conspiracy people that want to sell you a pocket full of shills are going to tell you, oh, well, if that was proof. That's not proof of much, except that the arbitrage was playing out for a moment. And then it resolved. It was never going to run based on that.
Yeah. That was just because people were short AMC, long APE. That's it.
Very easy to understand if you understand finance or if you were in the play.
Any other questions?
And thank you, Volksoy. He's being very civil, and I'm trying to also, like, I'm not trying to be a dick, but of course it was going to go. Of course it was going to go up. People had bets on an outcome, and there was arbitrage, and they had to adjust based on what the judge said. But I knew that eventually that the judge was likely to approve the settlement. So I had my bets laid on that. And I feel sorry for anybody that listened to something otherwise.
I mean, if they got out of it right then, that was great. Good job.
Absolutely. Absolutely. I love to see anybody win, no matter what it is. That would have been a great fucking time to sell your AMC and move it to APE. And I know people that did. I know people that bought APE on that price disparity for 65 cents. And they fucking cashed in a couple weeks later.
You guys are funny in the comments. I appreciate you guys. Actually,
all I care about is that you guys don't lose money and that you make the best decision to make money. That's all I fucking care about. Everything else is just noise. I don't care about anything else. I don't love Adam Aaron. I don't care about AMC. I just want to give you the best info to help you not make fucked up decisions.
We're the first week of the year, though, so anything can happen. So it is actually kind of hard to say. But we'll leave anything uncivilized for not Sunday night. Okay? So we'll figure this out. This is fun. Should we close it out?
Yeah, let me read Steven's comment. I'm going to put it up on the screen. He says, if you followed Tony, Steven, or a mediocre trader, or anyone who reads the financials, you recovered money. Yeah, we recovered a lot. I was down on my AMC, right? Because I made a lot of money in 2021, and then I bought later in 2021 at higher, $30, $40, whatever. And then it got run down to $8. And Steven says we recovered money. We did. We swapped at the very end on that price disparity. Yeah. We swapped our AMC for APE because we knew that the lawsuit was likely to go the way we thought. We recovered a lot of those secondary losses. Like, there was no way I was ever going to be red on AMC.
I mean,
because of my May, June trading, but it just depends on what you believe.
I don't want to be too victory lap because there's so many people, but I take L's in other places. Don't you worry. I have empathy.
Well, I took an L, like from late 2021 price to 2022. I took an L on my AMC, but at
Yeah.
some point I swapped it, and I recovered a lot of that, and I'm going to be fine.
When does
I'm
he
going to be fine.
usually report earnings? Is it a February event or is it a March
It'll
event?
be early March. February 28th was the earnings for last year, so
Oh yeah, I
I
remember.
expect early March.
We got a leap year this year, so that's exciting. Is it have to do with the groundhog? Does he report early if the groundhog sees a shadow? Maybe a girl can ask. You know, all right.
Maximus says, "I won't go down with this ship."
Oh no!
Oh man, I know the soundtrack you're pushing there, Maximus.
All right, should we call it and we'll hang out
I'm
again?
gonna let you sign off, May. I'm gonna hang out for what
Oh,
time is
cool.
it?
Bye,
10:50. I'm
guys.
gonna hang out. I'm gonna hang
Happy
out 10 more minutes.
Super. Bye, guys.
10 more
Happy
minutes so I can have a round hour because I'm just like OCD like that.
Fair enough. Bye,
Thank you,
everyone.
May, and let's talk about doing a SoFi live
Sounds
stream maybe
good.
later this week.
Sounds really good.
All right. Thank you for your time, and we appreciate your commitment and your sharing your knowledge with this community.
Thanks for having me. And thanks for getting me off my lazy bum and actually doing videos. Bye, guys.
All right. Take care. She's like, Tony's had way too much to drink. I need to get off of this live stream. I'm just teasing. But no, I'm not really teasing. It's only 10:50 here in my time zone. She's an hour ahead of me. So almost midnight where she's at. I'll hang out for 9 more minutes with you guys. Anya says you need to invite her in the Discord. Thank you, Sly. He said, don't forget to post the Q4 estimates. That video is done. It's rendered. It's ready. I just need to upload it to YouTube. So thank you for the reminder. I probably would have forgot. So after we end this, I will upload the Q4 estimates, which I did earlier today. And it is very tough. I'm going to be honest to guess what the Q4 earnings is going to be. And if you don't want to watch the whole video, I think it's about 12 minutes, but I'll give you the rundown. We have the unknowns. What is the actual share count? Don't know. Is it 197 million? Is it 259 million? Is it something in between? That'll affect earnings per share. We don't know that exactly. We don't know what percentage of we know what the box office was. We don't know what percentage of that AMC got. So that's another unknown. Always is. And we don't know the exact details of the Taylor Swift distribution deal. We have an idea what it might be. So don't hold me to the numbers, but I'll give you, in the video, I give you a couple scenarios and we'll just see. It's just for fun. I'm not saying I'm going to be right. It's just for fun. And if I'm right, great. Another little notch on the bedpost. But if I'm not right, I'm not going to lose any sleep over it. I do my best to make a guess based on the spreadsheet. But man, Q4 got so much unknowns in it. Thank you, Brazil. Thank you, Steven. Steven, did you see my DM about Vegas and Mullen? If you can go get some on-site video, I would love it. Volksoy says, any advice I could give you, quit the vape. Yeah, I hear you. If you haven't heard the story, the vape is my step down from what my wife, when I met her 7-8 years ago, she was very big into hookah. You know, the I don't know, I don't want to be racist, but the Arab hookah smoking, it's just tobacco, flavored tobacco through a water pipe. And we got to the point where we went from doing like a weekend hookah to a daily hookah. And then I started having a lot of pain in my chest, and I was like, I can't keep doing this. This is bad. I feel awful. But you get that little nicotine habit. And so the vape was my step down from hookah. And at some point, I was never a smoker in my life until I met her. At some point, yes, I would like to stop the vape. So keep on calling me out on it. Steven says I'll check out Mullen. So Steven, they're at a show that starts next week, Mullen. I can tell you, Volkstoy, that I don't wake up with pain in my chest from this. But yeah, I mean, I don't like having bad habits. It's bad enough to drink. The cigars I just do occasionally, like when I hang out with you guys. When I'm in Vegas at the gambling table, I don't smoke a cigar every day. When you see me, that's the cigar I smoke. Once a week, twice a week, maybe. But this should be a habit I kick. Anywho, he says the health risk of vaping is worse than cigarettes. Maybe. He hopes Polestar does well. I haven't checked Polestar recently. I've been watching Lucid. They've been getting wrecked. And who else? What was the other one that starts with the F? I'm bringing up my screen here. Fisker. Fisker has been getting wrecked. Holy smokes. $7 down to $1. Absolutely wrecked based on their ineptness in deliveries. Fisker's been getting wrecked. Mullen is an interesting play right now. If any of y'all are in Mullen, it is a low float. There's no options in the play. The short interest is high. It's hard to borrow. I can't say to you buy Mullen because it's going to short squeeze, but it's still an interesting play. They did not release their 10K on time. They asked for a 15-day extension. I don't know what's going to happen. I'm not a big believer in Mullen. Even if they have deliveries, I think that they're still going to lose money. So I don't know what to say about that other than good luck. Polestar, how bad is it? Since January, $6 down to $2. Ah, god damn. Polestar has some nice vehicles too. I wish just like one of these guys would make it to actually give Tesla some competition. But if you've watched any of my EV videos, they all have their unique challenges. They all have capital raise and cash challenges. So it's tough being the underdog. Tesla is the clear winner, even though I think Tesla is overpriced. It's tough to buy any of these companies. I'm covering them because I'm looking for an edge, but I don't own any of them right now. I'm just looking to understand them, buy them on the dip, and then hopefully ride them up. That's where I'm at. They're all just volatility trades for me. And I wish them all luck. But for me, I'm not going to hold any of them. I'll buy them when they're cheap, sell them on the run up. Steven says, I sent Merriweather an email about the reverse split. Hopefully he confirmed that it's not up for consideration. Good luck. Every time I send them emails, Steven, most of the time they don't answer me. A lot of people think, oh, Tony talks to AMC all the time. Adam Aaron's never answered a single message that I sent him. Investor Relations, which is Meriwether, has answered about 1 out of 4 emails that I send them. And typically the answer is refer to our 10 Qs. Like, they really got to be careful what they say. They're not going to give you any information that would be considered some sort of insider trading information. So let us know if you hear something, Stephen. Although, should I talk about this, Stephen, about the phone call? Should we talk about the phone call? How many people are in the chat? I don't want to get someone in trouble tonight. Should we have a bonus for anybody that stayed late tonight? 117 people. So I have it on good authority that someone talked to Adam Aaron in the past few weeks. Just a rumor that I heard, friend of a friend. But I don't want to talk about it if y'all don't want to hear it. All right, Volkstoy says, that's a good man. Yes, it was hard. I do a CBD once or twice a week. Yeah, we have some gummies, but that shit fucking knocks me out till noon the next day. Tech We Love says, Adam has responded to 1 or 2 of my emails and Meriwether has responded to 2, but a few of mine have gone unanswered. All right. I don't feel so bad then. They rarely answer my messages. I'm in the same boat as you guys. I'm just a fucking regular retail trader. I have no special connections with them. All right, the phone call. If you search hard enough on social media, you can find Adam Aaron's cell phone. It's out there. And a friend of a friend, or just a friend, called him in the past couple of weeks and asked him some questions. And basically, Stephen, help me out here. What did he say, Stephen? He basically said, if I could summarize without getting anybody in trouble, he said, we're looking at 2025. Is that a fair summary, Stephen? It's kind of like validated what I've already been thinking all along. Like 24 is going to be a flat year, a volatility year. Trade it smart. You might have some opportunities, but really the chance for the company to shine is 2025. Steven says, keep it ambiguous. Is that ambiguous enough? I mean, I don't have a whole lot of detail other than apparently, allegedly, friend of a friend that talked to Adam Aaron, he said, we're kind of looking at 2025 as the year where things could change. And for me, that was just validation of what I already think, what I've already been telling you guys for the last several quarters. Now, at one point, I found his phone number. I didn't save it, but I know that it's out there on social media. Someone said, why don't you call him, Tony? Why don't you ask him your questions? I know that he's smart enough not to answer the questions I would ask him. They can't give you specific information that would be considered insider knowledge. Anya says, I have become a bottom feeder. I'm patiently waiting for the bottom. Anya, are you in the VIP in the Discord, Anya? Those of you that are in the VIP, you know that I bought several days towards the end of the week last week. All right, this is not trading advice. I know people want to crucify me anytime I talk about what I'm doing. But I did buy the lower it got. towards the end of the week. I did, in effect, double my position by the end of the week. I was trying to catch the bottom. I don't know if I caught the bottom. We'll find out. But I'm not like loading the boat. I'm not expending all of my cash at $5.15. What is the price right now? If it goes lower, I'll keep buying it. But in snippets, in nibbles, as I call it, and because I don't know. I mean, the shorts seem to have a lot of power right now, so I don't know where it's going to bottom out. But if I look at what I think the fair value of AMC is, we're at a market cap of $1 billion. And I think that a fair market cap of AMC is around 1.5 billion. So that's what, $6? Let me do the math here real quick. Hang on. 1.5 billion divided by, let's just say there's 259 million shares. 579. So just shy of $6. Let's just call the fair market price $6. I feel okay buying it at 517. Does that mean it might go down? Yeah, it might go down. But I'm not trying, I'm just grabbing some nibbles. I made this mistake on GameStop too many times of not buying it at the bottom, and then it ran up $6. That could happen with AMC. I don't know if it will, but there are quite many of us that think a decent run up, $8, $9, $10, $11 of AMC is easily possible for no good reason at all, other than it hit fair value and people stopped shorting it. We'll find out together, guys. I'm just letting you know where I'm at. My cost average is very close to the current price, so my feelings are not hurt if it goes down a little bit. I feel bad for the people that have a $40, $50, $60, $100 price average, and they're not willing to buy it at this price because they don't have the cash. I get it. I feel bad for you, but I like it at this price. Tech We Love says, Tony, I didn't know about RSI when I first got involved, but now I know, and it's easier to know when the dips are good for me. Don't just go by RSI, but we look at RSI every day. Guys, if you think I'm not following AMC, I'm following it 6.5 hours a day, the whole trading day. And I look at RSI, and I look at MACD, and I look at the 1 minute and the 5 minute. But there's not just one indicator. You got to have a melange of multiple indicators that you're looking at. Anya says, I'm selling my gainers to make cash from AMC. Let's hope that happens, Anya. There's nothing more I'd love to see in the next 6 months than a run up to 10 or 11 bucks. I'm not some crazy pumper that's telling you it's going to $1,000. But another unexplained run up to $11 wouldn't surprise me. If you're in my Discord or you talk to me on a regular basis, you know that I'm bearish on Q4 and Q1. And there's going to be a lot of news articles that come out that say the movies suck, the box office sucks, yada, yada, yada. But there are plenty of examples of this stock running up for no reason. So just be careful. Don't overcommit to the play. Be smart about what you're doing. I like it at this price. That's just me. I'm a little bit of a gambler, and it's not my only stock. Not even Not even close. Honestly, the people I feel the worst for are the people that are so negative on this stock that they refuse to buy it at $5 or $4 or whatever it drops to. I mean, at some point, the company is not going bankrupt, guys. Not in the next year. They've got $1 billion of cash. Even if they burned 200 or 300 million in the next 4 quarters, they're not going bankrupt, in my opinion. Not financial advice, This is just my DD, how I'm thinking about it. I like it in this range. I like it a lot. The lower it goes, the more I like it. Ron says AA has a lot of shares to dump. Hey, that is my concern, Ron. Yeah. That my biggest fear, I said this earlier, and I've said it before. My biggest fear is more dilution. I don't know the answer to that. I am buying because I think he is done, but I don't know. $1 billion of cash on the balance sheet's pretty good. I hope that he's done. I'm betting that he's done, but I don't know that he's done. Steven says, if you're going to buy AMC, open a new account and start at 515. You almost can't lose. Why open a new account, Steven, though? Why not just buy it in your existing account? If my cost basis was $80 or $100 or $200, and I bought some on Monday at 517 and it ran up to 10, I would tell the broker which lot to sell the ones that I bought at 517. And the rest, it's kind of like sunk cost. Maybe one day it'll run up and you can dump those. But trade the ones that you buy. What are my thoughts on 2025 leaps? I think that's very risky, Mr. Resonance, because you're going to have 2024. I think is going to be a poor year for the industry. Based on what the analysts are telling us, it's going to be flat or worse than 2023. So I don't want to burn all my money on leaps. That's my thoughts. You ask me my opinion, that's my opinion. I'm going to be trading it on the weekly. I'm going to be buying shares cheap. I'm going to be selling covered calls on those. I'm also going to be selling cash secured puts below the current price. I don't want to hold options for long term. Because I don't see. Okay, look, if you buy a leap and it runs up to $11 in 30 days, then you're good. But what if it takes, well, I don't know. I can't promise you it's going to run to 11 in February or January. What if it takes a while? You could just buy shares cheap and then sell covered calls on them and sell cash secured puts and just generate extra income that way and lower your cost basis. Volkstoy says, side note, when does Phil for real new song about the AMC and Ape Island drop? I don't know. I saw Phil in the chat here. He's East Coast. He's in Florida, Orlando. Phil, let us know if you're still here in the chat. But I did I saw that he got booted off of Twitter. I haven't talked to Phil in a while. Many, many months. But he is a good guy with a good heart. He's a strong believer in this company. I know he hates anybody that talks bad about AMC. I've tried to share some DD with him, like maybe he's getting over the ledge a couple times, but he don't want to hear that from me. Nobody wants to hear from me. Nobody wants to hear my DD, including Phil. So I just love him for who he is. I appreciate anybody that likes movies. And yeah, I mean, AMC is a challenging play. If you haven't looked at Cinemark, they've got over 20% short interest. And they turn a profit on half the, on much less of the box office than AMC. So I'm looking at Cinemark too. I'm hedging my bets. I don't own any at the moment. I did own some in the past couple months, and I sold it for a profit, and I got out when I knew that Q4 and Q1 were not going to be good. But Cinemark, something you should be looking at too. They are, sad to say, in much better financial condition than AMC. But if AMC upsets the Bears, it has a much better chance of running. So that's the gamble. Cinemark's going to be a slower mover. AMC is going to be more volatility. But who knows? What if Cinemark squeezes? Wouldn't that be ironic? I don't know. I'm going to play them both. And I will only be watching movies at AMC. That I will promise you. For all of you that hold AMC, all of my leisure budget that goes to movies and concessions will be 100% at AMC. EJ says, did management have their shares adjusted for the pre-reverse split prices? So I was looking through in detail the Form 4s, and it's very confusing to follow. I'll grant you that. But if you look back at the Form 4s from February and then the more recent ones, and I know, again, the same bears, the same AMC haters that were saying Cinemark pays half the rent of AMC, yada, yada, yada. They're also pushing out this narrative that I don't want to name the names, but you guys know who I'm talking about. These guys are pushing out the narrative that the executives paid themselves a bonus of AMC shares through the reverse split and the ape conversion, yada, yada, yada. I looked through those Form 4s very, very closely, and I did not see that. I admit it's a very difficult trail to follow. But all of the evidence is there. If you go look at the Form 4s and you properly read all of the footnotes, and that's what those guys didn't do. They didn't properly read the footnotes. They read what they wanted to see. If you properly read the footnotes, there were some adjustments made when Ape came out. Their RSUs and PSUs got split between AMC and Ape, and they had to pay some taxes on it then. And then when Ape converted back into AMC, the RSUs and PSUs got readjusted again. But in essence, they still are about at the same point where they were. I saw all the messages that said, they paid themselves handsomely for this. No, not what I saw. And I'm not defending anybody. If I saw that they enrich themselves, I'd fucking call them out. But these people don't know how to read Form 4s. They don't know how to read footnotes. Spend an hour looking through it and let me know what you think. Don't just take somebody's word. Don't take my word. Certainly don't take their word. because they're coming at it with the bias of everything is anti-Adam Aaron, anti-AMC. And again, I'm no defender of him. I'm just a seeker of truth. Truth will set you free, Mr. Veritas says. I mean, like I'm a pretty good form reader, and I will be the first to admit that reading those Form 4s and the 7 footnotes on them is very confusing. If you only did 1 minute of DD on them, like these guys that are on Twitter did, you could make a really bad assumption. I looked at it for a long time. There were a couple of discrepancies to a minor degree that I couldn't explain. But I will say for the most part, they are equal to where they were before this all started. All right, what is this message up here from Tech We Love says, I have a relative at 105 and they won't average down. And another friend at 65 who's on the fence about averaging down. Steven, do you have any comments about that? I don't want it just to be about me. And I don't want to repeat that trope of buy when others are fearful. But I love to buy when others are fearful. Like when all of y'all are scared to buy any stock, be it Disney, CVS, AMC, when y'all are scared to buy, that's when I'm buying. It's worked very well. Like whatever the retail sentiment is on any play, just do the opposite. Anya says, Tony, you read 900 pages of whatever. That was the plaintiff's, what's the word, Anya? I don't, it wasn't the affidavit. It was basically their evidence. And I know a lot of people question when I tweeted out that I read the 900 pages, like the next day after it got released, how could he read 900 pages so quick? We can't even start to understand this. 900 pages, half of it was financial statements, which I was already intimately familiar with. The only thing I had to read was a couple of emails and that was in the discovery and the board meeting minutes. Most of the 900 pages was analysts' estimates for the company and balance sheet stuff. I already knew all that. I could skip through all that. Very easy to do. Tech Love says, except retail is buying these dips because I did, and I know a lot of people who bought these dips. Yeah, this is where, okay, let's real talk. You got to be real careful about buying the dips, right? Like you don't want to buy a dip on a company like Bed Bath & Beyond that's going bankrupt and diluting shareholders 7x in 90 days because of warrants. You have to understand everything that's going on. And that's why my biggest fear for AMC is more dilution. If they announce another $350 million ATM next week, I'm screwed. Even if I bought at 517, it's going to $3. My bet, my gamble, my speculation, don't copy me, is that they are done. And if they screw me over, I didn't bet more than I'm willing to take a hit on. So don't fucking bet the house. Don't trade in your 401k to buy a speculative play. It's really that simple. The people that are the angriest over leveraged themselves with more money than they should have in a speculative money losing stock. You got to realize what it is and manage your risk. It's really that simple. Steven says retail is extremely bearish right now. They're shorting and they are bragging about it on Stock Twits. So the opposite is the right side. I agree with you, Steven. And I'm gonna reiterate what I said earlier. I think I will make more money on AMC this year than I will on any other ticker. I don't know if I'll be right. I'm just telling you where I'm at. If it runs up to $10, we're going to double our money. Meanwhile, the people that are scared to average down, I'm down 99%. They're just going to sit on their hands and do nothing but bitch and moan and post racist slurs about the CEO. I can't help those people. All right. It's almost 11:30 my time. 4 minutes max. Last questions. Sapientia et Veritas says shorting the SPY from 377. What is the SPY at right now? Wait, from 377. What are you talking about? Explain. Oh, 477. Okay. Woo. Every now and then I trade the SQs. I got out of the trade recently on a little bit of a run up. I should have stayed in it longer. I had call options on the SQQQ, and I made a little bit, and I got out. God damn it! I should have fucking held it. What do we have? Five days of run up since the 28th. Anyways, yeah, I look at those index plays every now and then. I've been more trying to figure out how to trade Tesla on option plays. Anthony says 587 releases in 2023, average haul of 15 mil a movie. Let's hope, Anthony, that they increase that in 2024. I don't know that they will. I'm just going by what the industry analysts are saying right now. They're saying it's going to be a little bit lower in 2024. I hope they're wrong, obviously. Good luck to you, Sapientia. Clark, is Clark in the chat? Oh, Clark says, Julie and I just tuned in. Welcome, Clark. Oh, man, you missed out on like 3 good hours of talk, man. Thank you to May again for explaining all of the debt stuff tonight. She knows, as I said, way more about it than I do. I know just enough about bonds and debt to be dangerous, but she actually has working knowledge in the industry on that stuff, way more than I do. And I love to bring on people that are smarter than me. And hopefully later this week, maybe, we'll do a live stream about SoFi, because that's always been one that's on my watch list. Let me bring up SoFi real quick. I owned SoFi and then I dumped it. I got my little Fibonacci retracement here on SoFi. Ran up to 1170 back in August. Dropped down to 6. Ran up to 10 on the way back down right now. I'm really tempted on this. What are we back down to the 50% level? This is really like an area where I'm interested. So maybe May and I need to have a chat about SoFi in the next couple days. Kind of like the no-brainer retracements, around the 61% level. That'd be 725. But a lot of times these things bounce right off of here. So we'll know in the next couple days. It's been a long time since I did a SoFi DD deep dive. Steven says, did you ask May if the 26 debt is most likely one holder or multiple? I did not ask her. But Steven, she made a comment that, and I should have questioned her on this, that Antara was one of the main lenders. I don't know how she knows that, but I will follow up and I'll let y'all know. I don't know how we find out who the major lenders are on the debt. But if she knows and she will tell me, I'll let y'all know. Wedmore says, money is tight. Is it just a case of chipping away at our losses? Buy 500, sell at 1,000. In my book, yes. I don't give y'all trading instructions, but in my book, yeah, I think that's the smart play. Forget about the short squeeze. If you've got shares that are way underwater and a short squeeze happens, all right, well, you can address those shares at that time. But in the meantime, you understand the play, you understand the company. Hopefully, if you're following this channel, you understand the financials. And I don't think that the company is going bankrupt. So it's a matter of buy it cheap, sell into the run-ups, rinse and repeat. That's how I'm playing it. Same as I've been doing GameStop for the last year. That's just me. You do you. Not everybody's going to do that. People hate me for that. I'm going to make more money on AMC this year than any other play. Tech We Love says, please don't forget to upload the AMC earnings forecast. Thank you. All right. It is 11:30. Let me close this so I have a moment. The video's done. Give me about 15 minutes for it to upload, and we'll get the Q4 earnings video out before I crash the Q4 earnings estimate, which I did when I was 100% sober. Thank you, guys. We love you. May says thank you. I say thank you. Thanks for hanging out. And feel free to ask questions. If you're watching this on replay, ask questions in the comments, and I will do my best to answer them. Love you. Have a good night. We will see you on the next one.